All right, how's everyone doing? You remember, thank you. Okay, so we took a little break. Come on back to your seats. What we're going to do right now is we're going to start with our chance panel. And after that, we have a few more presentations, and then it's networking and beer. Everyone cool with that? Thank you. Thank you. You, sir, get a free T-shirt. All right, 2 seconds. We'll be back.
Oh, hi guys, we're getting started. Hi, I'm Chance Barnett. This is not the Chance panel, but that's nice of everyone. This is the family office's perspective on investing in cryptocurrencies and ICOs. And we have an incredible panel of people, so grab your seats. I'm Chance Barnett, co-founder of CoinCircle. We do end-to-end solutions for mature post-Series A companies. Coin design, coin engineering, finance, marketing, token sales. I'm also the founder and CEO of crowdfunder.com. Started that getting involved in the Jobs Act, and we're an equity investment platform. And I'm really excited. I also, over the last several years, became an advisor to a family office, the Haas Portman family office. And I helped them with early stage investments. And through that and through a lot of other great relationships, I've met a whole host of really incredible family offices. So what we have today, I'll allow them to introduce themselves because I could not do them justice. Some incredible people that you're going to hear from about how they are looking at and participating in token sales. And we also have a VC who used to be at a family office, so she might or might not share some secrets. So would you mind introducing yourself first, Kavita?
Thank you, Chance. So 2 points. Chance actually doing so much that he was not even able to say 5% of what all he has been doing. But anyways, it's not your panel, so I'm not giving back to that to you. Hi guys, my name is Kavita. I am the founding managing partner of Consensus Ventures, which is the venture arm for investing into ethereal blockchain companies from Consensus. We are investing in pre-seed, seed stage equity rounds, and doing a lot of pre-sales token. It's also the way we have structured. It's also one of the first VC hedge fund because we have a liquidity desk internally to manage our positions on tokens, both short-term and long-term. Before this, I was working at Eric Schmidt Family Office on various investments. And I am really here excited to speak with all our other panelists. And also, if there are any good ideas, entrepreneurs in the room, please do find me later. Thank you.
Hi, my name's Sam Engelbart. I work at Galaxy Investment Partners and manage our private investments, which includes traditional venture capital and blockchain crypto investments and a variety of later stage investments as well. I've been investing in media and entertainment originally for a long time, and mostly more in private equity, and then over the last 5 years have been transitioning increasingly to earlier stage venture, and now almost exclusively in blockchain and crypto.
My name is Will Peets. I'm the Chief Risk Officer of Passport Capital, but more recently leading our initiatives in cryptocurrency. Passport's a unique organization in the sense we're a hedge fund with a 17-year track record, long-short equity, macro thematic. Our founder likes to say we invest in things that have never happened before, and so you can see why we're focused on cryptocurrencies now. But in addition to our hedge fund business, which is a kind of institutional fiduciary, we have a large family office that does seed and Series A investing, and also a foundation that does fund investing, and like I said, leading up our initiatives now in blockchain technology.
Howdy, I'm Alan Reed. I'm with the Arista Group. It's a Portuguese and Greek shipping-based family bringing LNG-fired ships to the world, so some cool environmental impact there. My background's really fintech and brokerage, investment management. So at Arista, we got goose egg right now in anything to do with blockchain or crypto.
Good. Well, we want all perspectives on this panel, including goose eggs, so that's fine. We'll take it, Alan. Thank you. So, look, there's been this incredible meteoric rise. That's part of why everyone's here in development, investment in the blockchain. The market cap of cryptocurrencies has risen from what was $7 billion in January of 2016 to $155 billion today, although it was 130 a couple weeks ago. Always a fun ride. Those kind of returns are attracting family offices and larger investors. Over the last 30 years, you've also seen family offices become a lot more active and play a really significant role in early stage venture, not just investing in funds, but investing directly in deals. So I really want to start off by saying, family offices are not yet, if you think about the larger market, in this market. Are they going to come in? When are they coming in? You guys are early. You guys are innovators. You're doing really amazing stuff at yours. What do you think is the larger market sentiment out there? Do they have a sense of what's really happening here, family offices in general? Sam, I'm going to call on you first.
Well, I guess I don't know that I represent the typical family office situation because...
You don't.
I don't represent the typical family office situation. So I work for a guy named Mike Novogratz, who has been, long before he started investing in crypto, was one of the kind of legendary global macro investors and speculators, and a guy who made his career venturing into risky and uncertain waters. And he was, his case is interesting because he built a couple of different times very large institutional investment businesses, including co-founding Fortress, and taking that through the IPO. And he was also prescient enough to see back in 2011 what was on the horizon with Bitcoin initially and crypto more generally. So when I joined him, we already had a very large business investing in cryptos. At the time, the ICO thing wasn't what it is now, but I never had to convince anybody to play in cryptos, and in fact, it was because he was already such a large investor in the space and so excited and passionate about it and wanting to build big things that I went and moved from LA to New York to join him. So, I think that from my perspective, I still believe there are a lot of reasons why family offices are an ideal platform from which to invest in the space. I think generally family offices have a long time horizon. I think that's very important in this space. I also think that any of us that are currently investing in it know that it's a messy world out there still, and in order to do this well now, you've got to be willing to, most likely you're doing things that you may not feel comfortable doing just yet with institutional money or feel that you can do. So you've got to be able to move fast and be nimble and take risks that it's tough to do when it's not your capital. So family offices, I think, are really, for right now, are a really important entry point as we move from individuals managing and investing off their, relatively small PAs to a somewhat more institutionalized form of investment vehicle in the family office. And I think now what we as family offices need to do is think about how to create that next layer of institutional credibility so that we can then move out into managed funds and other things where you're responsible for other people's capital outside of your own.
Yeah, Chance, I'd say it's all about passion. And the cool thing about family offices is everyone's going to be different, right? It's not like an endowment or foundation where they've got very strict fiduciary standards, but where the passion is. So I worked with a family partnered that they built a little museum over the 405 not too long ago. But they had passion around this. So in '97, we were talking about creating new currencies. We missed the blockchain part, but the point there is there was passion around economics, and so that's the cool thing. You get a family member engaged, they'll be able to, and family offices, many of which are in the multi-billion-dollar pools of assets. You don't need the $1 billion, right? And for them, that little spark, they'll have that opportunity to play there. But it's sort of out of their growth capital. So it's important to sort of think about it and position with a family office and a member that's got real passion in the space, like you got.
I guess the only thing I'd add to that, we're building a platform that enables family offices and institutions to invest in that space. So we kind of have a gauge of where they're at, and I think it's only really the most forward-thinking family offices that have started to allocate. They have the convenience of duration. They don't have the same fiduciary responsibility because at the end of the day it's their own money, so they're not worried about getting fired relative to a board. They can take operational risk that others can't. But even in that cohort, I think there's only still a few family offices, again, that are very forward-thinking or that are allocated, and we're just now starting to see kind of an inflection point for them to get involved.
So what do you see the potential for family offices, seeing that you're focused on that, for them coming in the market? A lot of people are talking about the potential upside in the larger cryptocurrency market because we haven't seen a significant amount of institutional participation. Do you see a lot of potential for the market growth because of that? And where do you think that might come from?
I'll first talk about my experience on the other side with the family offices. I think patient capital family offices are very US or European bounded. I'm getting a lot of interest from Middle East, South America, and South Asian family offices who understand that the way our fund is constructed, which is just 3 + 2 years, is basically matches the short-term capital which they usually invest in infrastructure projects or growth stage companies where they want them to get acquired or IPO very quickly, and they want their money turned around and their whatever excess returns over next 3 to maximum 5 or 6 years. So we are getting a lot of interest from them to be LP or to invest alongside. I think coming back to your second question, we are not seeing the institutional investors because we are still waiting for a lot of security regulations and rules to work out in this industry. But because of big family offices moving and co-investing together, like some of your offices, and especially international Singapore-based family offices, which is already moving like $100 of million on the co-investment deals. For an example, I'm looking at one deal, and before I could even go out with to syndicate it with my other friends in US, I have 2 other offices in Singapore, which is taking the full position. So I think there's a lot of movement, and it's very revolutionary in a way that this is the first time a technology is actually getting so much acceleration and so much market capital because of family offices. So the strength of family offices is actually a leader in this case instead of a follower, which has been in the history.
Yeah, I think that's such a great point because generally with family offices, you're kind of always looking for your edge, right? You're usually not managing enough capital to compete with institutional private equity firms or venture firms. I mean, except for the very few. And yeah, this is absolutely an opportunity and an asset class for family offices to really have an edge.
So let's jump right to some of the questions everyone is hoping we might ask of you, which is, what are you looking to invest in? And I also want to explore, as a family office, how are you actually thinking about investing in ICOs and cryptocurrencies? Where does it come from? How is it allocated out of the portfolio? And how is it held? I think those are all much bigger questions than the average kind of individual investor.
I guess for us, in terms of how we think about investing in ICOs, I think it's very much how we think about investing in venture, in terms of the things that we're focusing on a given deal. So, I think Spencer was up here talking earlier, talking about the team, but does the market already exist? Is a digital currency a natural fit? So, Opskins, which is talking like they're already accustomed to trading digital assets. So there's attributes like that I think you can evaluate ICO companies on. I think with that said, from an asset allocation perspective, that's still going to be a very small portion of our portfolio, given the speculative nature, the high valuations that you're seeing now, and just how early you are in the market. From a perspective of risk manager, like it's a great asset class because it has very low correlation to anything else that's in our portfolio. We look at it and analyze it that way because that's how institutions view it. But it's still then just kind of how do we size it relative to the rest of our portfolio that's still relatively small, not like the Novogratz family here, but that's kind of how we're viewing it.
I'd almost look at it twofold, right? One is like in a private equity type of investment, right? High growth. And the other side of the coin is don't lose track of where flows have been rumored to come from, like money leaving China, right? So when you start thinking about multiple South American countries, Greece is a great example that the Panagopoulos deal with, is that when the currency starts dissipating and you're looking for a way out, in other words, crypto offers a lot of opportunities for functionality aside from speculation, if you will. So there's twofold, I think, that families are, and I think what you'll see is should we have volatility in the geopolitical world and currencies getting hit, I think that's when you'll see major movements into crypto, which aside from just speculation.
Kavita?
I think very interesting, one of the points which I want to pick up, which Alan just said, is we don't invest in crypto, but between tokens and equities, it has actually changed the market like 180-degree turn. So if you want a good growth numbers, you actually just invest in tokens because within 3 to 6 months, you're at least going to have 2x. In most of the cases, till the bubble exists at least, right? And then long-term investment, which is the traditional route of investing in pre-seed and seed, and then expect 3x to 5x return over the time the company grows and go to IPO or the valuation goes, is actually not much of the preference mood in the market. Said that, at least at Consensus, we want to invest into companies coming from the same traditional background where we want to hold either their equities or tokens in a long-term capital. Definitely want to help build up the ecosystem. But we also see that if we are taking LPs and having that fiduciary duty to LPs, we can turn around a lot of small amount of every company's tokens to have a sort of either liquidity or quick turnaround for the LPs. So this market has completely changed the way traditional investors have looked at with respect to profitability or with respect to patients' capital usage. And by the way, because we come from Consensus, because of our founder, I think Ether is only currency which we flow all the way.
I was going to add that.
I just had to plug in.
As long as there are ERC20 tokens being created and sold and liquidated, then it's all
Absolutely.
fine. Yes, of course. So I want to throw out a different angle to you guys. I personally believe in at CoinCircle, a portion of what we're building over time when we design and engineer and sell tokens, we want to focus a significant portion of our overall portfolio on impact-related, impact-focused opportunities. Where do you see the most interesting social and economic impact being possible with blockchain, decentralization, and tokenization? I want you to answer this question first, for so many reasons.
I was trying to avoid. So, as you know, I come from a deep impact investment background. Last 15 years, knowingly or unknowingly, even before the terminology was coined at the World Bank and IFC, that's what I've been doing in Africa, Middle East, and Asia. I think one of the reasons I was very, very happy and deep about jumping from Eric Schmidt and Larry Page to doing this ventures at Consensus, working with Joe, is the basis of blockchain for me is deep impact. You take that platform, irrespective of what blockchain you support, what platform you support, but you take that platform and put it into health supplies. All your data is now accessible. I can take my mom's record from one doctor to another doctor and can actually get the same care with like 3 eyes verifying on it. I put it on a fintech remittance platform, and I'm taking care of people who are working hard to send money back to their families in different countries, take the transaction cost down to 0.01% and the timing to half an hour. I take this platform to refugees in the identity platform and help actually saving someone's emotional credibility out there. So from education to water to solar energy, for me, blockchain is actually the base for any sector impact. So before going too deep and emotional into it, I'll basically turn that question around.
Well, I mean, our family office also has a very deep focus on social impact. And again, Mike's sister, Jacqueline, runs the Acumen Fund. His brother-in-law is Chris Anderson, who founded TED. I mean, this is something that's very important to us and a focus of ours in a big way. So I think we've talked a lot already over the last couple of days about the various ways that the blockchain and the projects that all of you are working on can create that level of impact, and I think that's all very real. I think likewise, you sort of like bringing the telescope in a little bit. I think one of the most exciting things about the space and in terms of impact is what I've seen in terms of the impact that it has on the people who are participating in the blockchain space themselves now, not necessarily the impact the projects are having on the people who are using the technology or on the receiving end of it, but just what I've seen in the several years now that I've been getting involved with it in terms of impact on how people are appreciating themselves and their lives and the lives of everybody around them. I've never seen a community grow like this fast and in such a meaningful way, and I think it's because there's this sense of pride in building something. And actually, like, Brock already used all my slides from Burning Man, so I'm so I'm not going to show those. No, but I really believe that. I think like this is an opportunity right now where people are engaging in something, and they wake up excited to go do it, and they go to bed excited to wake up again the next day, and that's rare, and it's especially rare in like the investment community. So I think we have to pay attention to the impact we're having on our own lives together, and out of that, a lot of great things are going to come.
And I would agree on the zero-sum nature of what we're doing, and it's a lot more collaborative than traditional venture investing. And I also like the social impact of that. The higher the price of Bitcoin goes, the more crazy and awesome Brock's outfits get. That's one of my favorite.
Oh my God!
Ones.
But the one thing I'm just going to jump in and say is we like to think that our world's so perfect today, but I'm from Northern California. People don't even know, like, are their properties burnt? Are their neighbors alive? Why? Because it's all paper, right? And in other words, those records are gone. So even today, in the world's most advanced environment, we don't know, right? Fires are going on. So just think about how that affects in other worlds, but also how fragile our environment is and what the value proposition blockchain can bring.
So we're almost out of time. A final, much narrower lens question: how are you looking at the ICO market? How are you finding out great deals? What do you like that you're seeing in the market?
Well, so I think sourcing deals, I think, is an interesting question, and just touching on the global nature of it. I mean, certainly events like this, you hear a lot of cool, interesting ideas. I think one thing that's fascinating about this space, coming from San Francisco, is that there's so much going on outside of Silicon Valley. So in terms of finding new ideas, we've been traveling a lot, spending a lot of time in Zug, in Berlin, in London. I kind of went through some of the characteristics of stuff that I like earlier, so I'll give others the opportunity. But
Damn, I'm calling on you.
What deals is CoinCircle doing right now?
Lots. I'll send you one. We're just wrapping up Unicoin Gold, by the way. Thanks for the plug.
There's a deal. There's this wax deal out there that I like a lot. I think there's great deals out there. I think that we should all be cautiously optimistic about the ICO market going forward. I think that it's, the pendulum does feel like it's swinging a little bit to me back to a bit more rational level in terms of money being raised and what investors should expect for the risk they're taking and what entrepreneurs should ask for and as they go out. And I think that's a good thing. I think that, regulation, as it comes on and we start to understand more clearly what can and can't be done, I think that's all a good thing. And we should just get comfortable with that. And with this is going to be an iterative process, and levels are going to get set as we go. And there's a great opportunity for everybody out there. I think if you hold on to the mentality that this idea that we really are trying to build something that's a win-win situation for everybody around. So.
I think with consensus, we are very lucky. The place where we sit, we see really broad range of deals coming our way. We have companies which have amazing ideas and execution power. We can provide them technology. We have companies which directly come only for VC. But at the same time, we have a token foundry where we can take any of the ideas and launch the tokens like VAX, something we are looking at. And our in-house spokes, we have more than 20 in-house companies, joint ventures, I should say, actually, which are also creating both the protocol layer or very big infrastructure projects. I have to do this plug-in. I'm sorry, I'm not going to get my money otherwise. I have to plug in about Uport, which is already presented here. Infura and Gnosis, some of the companies which are completely changing the game, how blockchain infrastructure is going to build up. So I think, but said that, certainly being here, at a lot of different events and credible events really help us to get stay connected with the entrepreneurs and learn more about what's happening in the ecosystem.
Just one observation is we're seeing a lot more, I guess, mature and developed companies starting to enter the ecosystem. And so in terms of flow of ideas, we've certainly seen a lot of our portfolio companies in the VC space, like contemplating, adapting a token model. And in some cases, that makes a tremendous amount of sense. In other cases, it feels kind of like a square peg going in a round hole and identifying an opportunity for raising, non-dilutive capital. So I think so long as people are being intellectually honest and, adapting a token model that actually makes sense for their business, you're getting a lot of very experienced, entrepreneurs and teams now coming in, and that's providing a lot of interesting opportunities.
I hear some people making a good business model out of that. Yeah. Alan, anything else?
I just have one more thing to add, actually. The new trend which I'm seeing is really established companies now adding blockchain on their technology and starting a complete new trend of token sales and having a different technology layer to it. Like 2 or 3 companies I'm right now looking, they are all already multi-million revenue dollar companies. But now they're adding another layer of blockchain technologies in it.
So I'd like to just go real quickly back. I know we got to end, but as the old guy on the panel, I remember the days when I was at Morgan Stanley and they almost fired me for using a thing called email. It was like, what is that? And so the reality is life's changing a lot faster. And the cool thing is regulation is here. And what we need, I think the great thing is as we evolve, as this space evolves, there's going to be an opportunity for regulation, and then there's a leadership role there. So I just encourage everybody to reach out, embrace, help, as that evolves, because that's when we get to the prime time. I remember they used to call him, they'd say he's giving whiskey to the Indians, right? How dare this guy use email? Well, it's the same thing today, right? We're hearing the grandfathers, the Jamie Dimons saying oh, this thing doesn't work. Well, it's because he hasn't opened his eyes yet. So I think the big thing for us is to help reach out and let the rest of the world know what's happening.
Great. Thanks for your time, everyone. Thank you.
How's everyone doing? Fantastic. Okay, I think there is food and beer about to open up in like 5-10 minutes, so you guys okay? I want to introduce the team behind the whole conference, so if you see them, at least you'll know what they did, and if you need help, they can definitely help you up. So first off, I'm gonna call Brandis. So Jason talked about hijacking his team. Well, I didn't hijack because she's here in LA and Jason is in San Francisco. So she's been here, and I've known her since 2013. That's when I started volunteering for launch. So Brandis, could you just tell us what you do and what's your role?
All right, so my responsibility here is to make sure that you can hear, see, and watch everything later on. So every presenter you see on stage, all the content being shown on the screens was not created by me, but we'll introduce him later. But just making sure that the logistics of putting on a conference from a technical standpoint goes smoothly, that is my job. So thank you, Kurt, for calling. I appreciate that.
Thank you, Brandis. Thank you for helping us. Well, stay on stage. Hang on. I want to call the next person, and he flew halfway across the world, which is basically India, so if you draw a map, it's halfway across the world. He's been here for 57 days now. He's here for 60 days. He'll fly back on Sunday. He did our graphics. He took all my crazy ideas and made them look pretty. So the badges, the designs you see on the badges, the logo, where's the logo? So the logo's not here, but the logo with the chain on it, some people made fun of it, but I thought it was cool and that logo, by the way, is not going to be redundant in 2018. Actually, it will keep going for another 93 years before it becomes 3,000, because it's 2018, 2019, 20. So the chain will stay constant for another 93 years. So Rahul, why don't you come on? So if you look at the T-shirt, I would tell him hey, I think we should do this, and then he would do it, and then we would test it out. We've been wearing this T-shirt for last 8 months, and everywhere we go, they'll be like, hey, that's a cool T-shirt. So we knew the T-shirt is a hit, and not to print the other ridiculous ones. But Rahul, here, why don't you say a few words, and tell us what you do. I know I've been telling your words, but here.
Hi, everyone. I'm Rahul, and I'm from South India. I flew in for this conference here. What I basically do is I design. That is my main job, but for this particular event, I did all the non-design job, including the printing job. So that was a fun experience, and I had Kurt used to tell me that this is like a crash course for you. If you are into event management, probably you should get into it right now. So yeah, basically 2 months of my life has been exciting. Probably the hardest months of my life, probably because we worked very hard for this. And I would like to thank Kurt for this opportunity. And I'm glad I'm here, especially in Santa Monica. I like the weather. It's like my home city. And again, a round of applause for my team, entire team. Thank you, guys. Thank you for working with me. And thank you, Kurt. Have a nice day, everyone.
Well, stay on the stage. So next is Scott. So again, Scott is one of the volunteers from... Scott, did you start volunteering in 2013 as well? Yeah, so I drive in to... This is the design center in San Francisco, and Scott and I are at the registration desk, and we're like, hey, what do you do? And we're like, hey, so what are we supposed to do? And we're like, we don't know, so let's set up the printer for the registration badges. All the headache you saw here, we've already gone through it every year. So Scott, here.
Yep. So I came in from Michigan. I co-founded a company out there called Pro Trainings. So we do online CPR training and certification. Trained a little over 1 million people in CPR. And yeah, I met Kurt in 2013 volunteering for the launch conference. Been back pretty much every year since then. So yeah, thanks for inviting me, Kurt. It was fun.
So Scott, how can they get to your website, the thing that you do? What's the URL?
Yeah, quickest way is go to procpr.com.
And what does procpr.com do?
Yep, you can get free CPR training. If you need it for your job, then you can pay us a little bit of money and get a certification. But otherwise, everyone should learn CPR, and it doesn't cost you anything.
How many users do you have?
We have well over 1 million people.
Guys, did you hear that? Because that's the shock I got on 2013 when he said the same thing. I'm like, what the hell are you doing here? You have 1 million users. Get out of here. You know, let the other broke founders with 0 users do the volunteering. Thank you, Scott. Thank you for helping. Well, stay on site. I'm going to call our finance person. Her name is Natalie. Natalie, why don't you come on? And she's been taking care of all the bills. I know I have some in my pocket that she's going to come ask for it.
Hi, everyone. Thank you for being here, and thank you, Kurt, for everything. And yeah, I was just basically in charge of mostly the sponsorships. And
So, Natalie, other than finance, what do you do?
I was also tackling the speaker, the schedules, everything, trying to make it get it all done.
And how did the speaker schedule go in the last 2 days? Calling them and making sure that they're backstage.
It went pretty well. I think.
You don't want to offend anybody, I guess.
No. Thank you, everyone, for being here.
Thank you, Natalie. I also want to call up Juliana to help us out. So Juliana, tell us, what did you do? And I know Scott was maintaining the registration desk. Tell us, what did you do here, and just a few words.
Sure. So I was involved with volunteer coordination.
And anything else that happened, that you can talk, like?
Sure. So I work with Scott. I'm a digital marketing strategist for his company. Prior to joining his team last year, I was a producer for the major opera company in Michigan. So I say a lot that producing operas is kind of like planning a wedding, except there are 15 brides. So events feels a lot like that. So thank you for including me in the team.
Thank you for coming and helping us. So I still want to know, like, how did you guys manage yesterday when it was like, a cluster F? How did you manage that? Because I was back here and I was having my own nightmare. How did you guys manage that, Scott? Like, what did you guys do there that kind of, or you just let it pass?
Well, there were mimosas, so that was helpful. Also, one of the really enjoyable things about getting a large group of people together who are all passionate about the same thing was just meeting a lot of people who were patient and who were just excited to be here, who were happy to be flexible.
So if you guys are doing an event, get mimosas for 9 o'clock. That was like a challenge for me because we didn't know if it's going to work or if it's going to backfire, but we did go for it, and I think it did help. Would you agree?
It helped. Well, it especially helped us.
Thank you, Juliana. Thank you. I'm going to call all the Well, where's Hardy? Is Hardy around? Oh. I'll let you introduce yourself, Hardy. Tell us what you did and what are you currently doing, or what were you doing before you joined us?
So I recently graduated from UC Davis with a degree in computer engineering. And I was helping Kurt out with all the vendors, the AC guys. I know I made some mistakes, but I did my best. Thank you. And yeah, the food, the AC, the garbage cans.
The beer.
The beer was my the beer was my job. So I hope you enjoyed the beer. Yeah, and that's pretty much it.
The food, right?
Well, I hear really good things about the chicken yesterday, so that I did good there, so that's good.
So how does it feel to be a vegetarian and people come and compliment you and say that chicken was good?
I have no idea. I just hope you guys like it, and I had some of the food yesterday, but it's mostly just imagination for me right now.
Okay, guys. You got to understand one thing. Kurt, Hardy, Rahul, they have never done an event before, okay? I've been doing events for 13 years, and I know how hard it is. So for him to take on, let's just give a round of applause for Kurt for having the idea, for bringing us all together, for taking a risk, both financially and that you would all show up. So, I mean, it's a big thing that we do here. And, you know, when I first met Kurt, you know, when I was producing the launch conference, you know, he just had a fire and a passion for people. And he's always been very, very positive. So as our leader, we just want to say thank you.
There's no leader here. It's a team effort. Trust me, guys. It's a team effort. I might be the face of it, but actually it's the team behind making sure that things are running. I also want to call all the volunteers up, because without the volunteers, it's going to be nightmare. Trust me. And I want the volunteers to just introduce themselves and say what they do and what they did as part of their volunteering. Frank.
He told me in the morning to put on a mustache, and I guess I kept my word on that. Want to thank you, Kurt. I'm Ernie. I came from San Francisco. I'm working on a blockchain marketing solution with influencers. So it's great to be here, to be connected with a lot of you guys. Helping everyone is a big community. There's a big pie that we're going to take a huge bite of. I love being here, so hopefully we all get connected and stay one big family here. But thank you, Kurt, for all your help. Cheers.
Thank you.
Yeah. All right, thank you guys for being here. Thank you, Kurt. I once took a train, 6-hour round trip to work 4 hours for Kurt as a volunteer. Proud of that. 10-hour day.
Yeah, he drove from here because he lives here, but I live in Ontario. So he actually drove out there, worked 4 hours in the house, and did like 2-3 days of these round trips. So he knew how I feel when I drive from there to here.
Props. And I just want to say one thing. I think that the dream failed in many ways, dream of the 60s and 70s, the communal self-reliance, take everything back, don't import, but build it yourself. I think we are almost to the point where we can actually do that, and blockchain is a big part of that. And I look forward to seeing all the intentional communities and villages, you know, techno villages that occur in the future. So glad to be here.
That was awesome. I don't know if I can top having a beer in my hand at the right now, but my name is Frank Banks, and believe it or not, I've never done security before. I'm actually a veteran software engineer. I used to be a lead systems engineer at Zynga. I have a startup where it's a social video platform and communications platform for fandom communities, where we are empowering our users and not exploiting them. So we're using the blockchain to try to make them transform them into stakeholders and not just users. We actually have users. We've gone from about 20 in April to about 1,000 a day now. The app is called Zen, Z-E-N, and we're working towards our ICO, and I really want to thank Kurt. I've learned a lot. I came here to learn and meet really cool people, and that's happened. I'm all about helping people, and if you want to get involved, just talk to me afterwards.
Community, and I'm a strong believer in community, and that's what I see here, and it's a breath of fresh air. Kurt put a great team and a great production together, and it's really awesome. Just some of the things I noticed just at the lunch line, I was collecting tickets, and some people didn't have tickets, some people were paying for other people, and it was just awesome to see what you guys do for each other, and it's really cool. My name is George Yamin, hardware engineer, and I love this scene, and I just wanted to come and learn, meet cool people, and I got all that today and more. So thank you guys.
Thank you, guys. I just wanted to introduce the team. Oh, you want a photo? Okay.
Hello. Okay. So thank you for your patience. I mean, you know, being able to thank the volunteers and being able to kind of give some props to the team that put it together, it never really happens. So we just wanted to take a minute to do that. All right, so we have a few more presenters coming up. So, sorry, I got distracted. So we have a few more presenters coming up. So we're going to get started in about 5 minutes. So anything you guys need to do, just come back in 5 minutes, and then we're going to roll this thing out, and then we'll be done. And, yeah, thank you. Kurt says free beer.
Good afternoon, everybody. Oh, I forgot my beer. 1 second. I can confirm that all the cliches about Irish people are true, as demonstrated with this beer. So, hi, I'm Paul Walsh. It's a pleasure to be here today. I've had a great time meeting people between yesterday and today. I'm conscious of the fact that it's the second part of the second day, so I don't have a very technical cybersecurity presentation. It's very high level with just a couple of tips that some people should walk away with, particularly those that are running companies in the cryptocurrency world specifically to help keep themselves safe and their communities safe from phishing. So a little bit about me. I was one of the first employed by AOL in Europe as the first international beta coordinator and technical accounts manager hired outside the US. And I was part of the team that helped to launch technologies like AIM, 56K modem speed, and of course I'm very sad to hear that AIM has been put on the shelf in December. And then just to give a little bit more context for the purpose of this talk, I've contributed to about 9 technical specifications at the W3C. I'm one of the 2 people that co-instigated the W3C standard for URL classification, and I'm one of the original 7 founders of the Mobile Web Initiative at the W3C, as well as being part of the early days of the Semantic Web Education Outreach Program. And then a little bit more about the team, because for me, MetaCert's currency, which is the company I run, it's a cybersecurity company, so our currency is trust. So if you don't trust the team, then you shouldn't trust the company or any of the products that we provide. So my COO, Ian Hayward, was the guy that built, funded, and maintained SpreadFirefox.com back in the early days, which was arguably one of the first and successful open source projects. And he, along with 3 of our engineers, built pretty much all of the mainstream browser add-ons, including Dig, Delicious, Yahoo, PayPal, eBay, Google, and bug fixing in Firefox. So we do really have an appreciation for open standards, open web, and open source, even though I'm one of the very few companies up here talking about blockchain and cryptocurrency, even though that we are not decentralized ourselves. And I can't confirm nor deny if we are going to decentralize trust and cybersecurity in the future. Read into that what you will. So everything we do is based on the premise of helping to keep you safe when opening a link. So in the cybersecurity world, and particularly in cryptocurrency, the figures that I want you to remember are this. You will read about the hacks that happen in the crypto world, but you won't hear too much about the phishing attacks, even though phishing represents more than half of all of the revenue made by the cyber criminals, with as many as 16,000, just under 17,000 victims. So you won't hear about that in the media, but it is the #1 cybersecurity threat in the entire of the crypto world. Now, can anybody shout out which of these is the real MyEther wallet website? Left or right? Okay, so most users won't know the difference between these 2 websites. And I'm not picking on MyEther wallet because it's insecure, but actually because it's becoming so successful as one of the most widely used wallets, which is also open source, they're actually getting attacked quite a lot by phishing attacks. So there's a huge amount of phishing websites dedicated to trying to steal your money whenever you try to go to a MyEther wallet website. So in this example, on the right-hand side, they've actually got an extended validation certificate, which makes the URL go green. But most users don't even know that. Even when you buy a basic SSL certificate, all it does is put a padlock in the toolbar. And actually, you can get those for free, and you don't have to verify anything about yourself or your company. So a lot of phishing websites actually have an SSL certificate, which means users go to their website, they see the padlock, and they assume it's safe when it's actually not. So, pat on the back for those of you who got the right one. I only noticed, actually, after I created this slide, I noticed that OMG is an actual token. So this is not related to that token. This is actually just, I've got like probably 3 or 4 tidbits of sound bites of advice for those that are launching tokens and ICOs. That is, trying not to do time-sensitive promotions. Now, I understand that from a marketing perspective, you will actually try to get the buzz going. But just be very cautious about doing things like, click here quick, you need to buy our token before it runs out in the next hour. Because when you do that, you get them into the mindset that every time they see a phishing scam that prompts them to react very quickly, they're not going to stop and think if they're used to you actually doing that as a part of your business. So just be mindful about how you communicate with your communities. This is actually contrary to what a lot of people will advise you. So I met a few people throughout yesterday and today, some of whom have got MetaCert installed already. And one of them told me, when I started talking about the domains and phishing, they told me that they actually bought a ton of domains so that they could make sure that the phishers couldn't actually catch them out. So don't waste your money on domains. Here's just a few of the phishing domains dedicated to my Ether wallet. The list goes on, and there's about 5 of those pages. So there's many, many hundreds of domains. The next piece of advice is, if you do buy more than one domain, don't redirect all of the kind of non-formal domains to the official domain, because you'll get people used to typing in an address and then being redirected. You do not want your communities to be redirected to another website, because that's what also happens in phishing attacks. You want them to be scared the second they see a redirect. So don't redirect your domains. I'm targeting Slack because those of you that have already got token communities and ICO communities, you'll know that that is the main attack vector right now. They're getting slammed. My phone literally buzzes every few minutes with phishing scam attempts. But the fact is, every messaging platform comes with no anti-phishing security built in by default. So when Slack is more secure, when more of the communities have MetaCert installed and it becomes more secure from phishing, those attacks are going to migrate to the other platforms. So be mindful of that as well. So we are working on an open source project with RocketChat to build a security module which will also be open source. And we also have products for other platforms, but if there's anybody here in the security world, that's a good opportunity for you to actually contribute by building security products for those platforms. So just be mindful that if you're on another platform, and I don't want to name any because it's pretty much all of them, if you're on another platform, don't assume you're safe. When there's enough people talking about and transacting money, the cyber criminals will move there. They will always go to the least possible resistance. And right now, that just happens to be Slack. This is what a phishing scam looks like inside a Slack channel. It's not like the really awesome Nigerian emails that we're all used to. These are actually written beautifully well, and they're actually very convincing. So what MetaCert does is you install it inside Slack. It gets built into the fabric of the service, so it doesn't matter what device or platform your community members use. It listens to links in the background, and the update that we released about 2 days ago now also secures direct messages and Slackbot. So those of you that are already in Slack and you're worried about the scams that are coming in via the webhooks and the Slackbot reminders and the DMs, the latest release actually addresses those issues. So what happens is it automatically removes the message before a user even sees it, and then tells them what the link was, without it being clickable, obviously, because you don't want to click on a link inside an alert. And then it also sends a direct message to the champion, the person who installed the app, on behalf of the community, so they know who to ban immediately. The other products that I would like those of you with communities that you're concerned about is to install our browser add-ons. Now, if you go back to the slide that I showed you all of those add-ons that we built in the past, at least you know it's going to be well built, reliable, and we take your privacy very seriously, and it's quite secure. They're fast also. So we have the biggest database of classified URLs in the world by a lot. We are the best in the world at classifying URLs. I helped to create the standard. My team actually built the technology, having done it for some other big security companies. I even own a patent for anti-phishing detection and prevention inside a mobile application. So we've been doing this for a long time, since 2005. But going back to whether or not I can confirm nor deny whether we're going to decentralize everything, I need to say that because mentioning patents is the last thing you want to talk about to people who are open source. So that's only there to protect it from the likes of Google. So what the add-ons do is you cannot stay on top of every phishing link forever, even though we have people contributing to our database on an hourly basis. So the add-ons, what we do is we label all of our customers' websites and all of the exchanges. So when somebody lands on one of those domains or their social media accounts, we turn the shield green. So from a user perspective, if it's not green, you just assume it's bad, assume it's dangerous, and don't actually type anything into it. So it does the opposite to blocking websites, but it does that also. It will redirect you to a warning page, and it won't allow you to go to a website that's blocked by us. And those add-ons will actually be open sourced. If you forget everything that I told you, that is fine. What I would like everybody to think about walking away is just this one thing. If you use your phone number, for a backup for your password on any of the following websites, Facebook, Twitter, Dropbox, Box, Gmail, GitHub, get rid of it right away, because it's one of the biggest attack vectors for those that are actually getting prominence in the industry. So here's a tweet that was sent by the founder of MyEtherWallet, and again, I'm not targeting MyEtherWallet. They are actually one of the most security-conscious teams that I've ever come across. They're very good at what they do. It is very secure. This actually can't be helped because it's actually a weakness of the cell providers. So yesterday, the founder of MyEtherWallet had her phone number ported to a cyber criminal's phone. So now what they can do is they can just do a password reset on everything. They don't even have to hack. What do you think AT&T's response was to this on Twitter? They clearly didn't get what was actually being said. Better still, they're demonstrating that they're actually willing to take a direct message with your contact details so they can help you port your number. Brilliant. So if that's the only thing you walk away with, then I've actually done my job. Thank you very much. My name is Paul, and I'm the founder of MetaCert. Thank you.
Hi, everyone. Almost done and ready for the beers. My name is Ariel Muslera. I'm with a company called RSK. Many of you may have heard of RSK, and I will tell you a little bit about what we've done so far and what our plans are. But before that, I wanted to kind of give you my personal views of some of the things that happened in the last couple of days, because I think are relevant for my story. I'm from Argentina, so is most of the team from RSK, and as you may know, Argentina has had a pretty large history of failures in the banking, financial, and government system in the last decades. The last big one was in 2001. We invented something that not any country that did before, which is basically freezing everyone else's bank accounts and confiscating our assets. Something similar to what Greece did a few years ago. Of course, copycatting what we did. So that triggered something in Argentina as a society, which is we are, in general, afraid of government and afraid of centralization of financial institutions. For several years after 2001, after the crisis was over, a large portion of the population didn't keep their assets and their savings in the banking system. It took us many, many years to recover from the crisis, and the banking system actually now is pretty well, but it took them 4 or 5 years after the crisis to just get back to the original level of deposits. And that's also one of the reasons why Argentina is one of the largest cryptocurrency communities in the world. Besides being, we're a relatively small country. We are 45 million people, but we have a very large cryptocurrency community, in particular Bitcoin. So I will tell you a little bit about RSK, but in the context of our idea behind this is that blockchain is a technology that can improve several degrees the lives of people that are outside of the system. And I will talk more about that later on. So it's been told over the last couple of days, Internet was kind of like the first wave of decentralization in a way. It was the first open network, and everyone changed their lives because of the Internet. In the early days, no one really thought about the possible potential of that, but now everyone here probably buys most of their stuff online and spends most of their money online, and of course, most of our social interactions are also online. So imagine how far we've come in just, 20 years. For us, for RSK, the Bitcoin blockchain has a potential to do something similar. But there's a problem with the Bitcoin blockchain that you probably are all aware, which is the lack of smart contracts capabilities. RSK is trying to solve that problem. And we have a roadmap, and we have been working for the last 2 years to build that and to solve that problem. So let me tell you a little about how are we tackling this. As you know, Bitcoin is the most secure network. It's the largest in terms of nodes, in terms of security, but it lacks the smart contracts capability. So the RSK team has been working adding this business logic, this smart contracts capability through a series of technological developments, and it's all open source. And I wanted to talk about 2 of the 4 co-founders, 5 co-founders of RSK. These 2 guys are very well known in the Bitcoin community. They've been around since almost the beginning. Sergio, the chief scientist, is an expert in security, in crypto security, and he's been involved in the Bitcoin core development for many, many years. And Diego is also involved in the community, and he also runs the Latin American Bitcoin community with more than 2,000 members, etc. So we've been around for a while, and my personal involvement with this company actually came this year. My background is I'm not a technologist, I'm an economist, and I've been in the venture capital space for a while. And I've known Diego for many years. And when we talked earlier this year and he told me about his vision and what this team was building, I was hooked. I've been exploring Bitcoin for a while. I had a few investments in the space. But when he told me about what RSK was trying to build and what they accomplished as a team in the last year and a half, I said, okay, how can I get involved? And that's why I'm here. So if you think about it, most of the people that came on stage have a technology background. I am not a technologist. I know enough technology to screw things up. But I do believe, and that's something that also was said around the different panels, that in order for Bitcoin and blockchain to be massively adopted, we need to get the technologists closer to the business. And that's what I want to achieve. We're a funded company. We closed our seed round back in May, and we have a roadmap. And so far, what we've achieved is in May of this year, we launched our testnet. So this is actually working. You can go online to rsk.co and test any application running on a smart contract using the Bitcoin blockchain. And by the year's end, we plan to launch our mainnet. RSK has the potential to increase the transactions per second from the current 5 to 10 transactions per second of the Bitcoin blockchain to 400. But what we found is after we achieved this and we listened to our community, we have a very large developer community around the world, is that in order for us to grow and to fulfill our vision, we needed to add a little bit of more of an infrastructure layer around it. So I want to talk about that. Because our goal at the end of the day is to achieve this. We want to have 1 billion people getting services, blockchain services around the world. And let me stop here for a second, because for us to have 1 billion people on blockchain services, there are a few things that need to happen. The first one is most of these 1 billion people should not know anything about blockchain. They are users. They're not technologists. They're not cryptographers. They don't care about stuff. Okay? Now, in the world, there are many problems, especially in emerging markets, that can be solved with blockchain technology. Our challenge is how can we develop applications that benefit from the blockchain potential but are easy enough for the user so that they just work. Okay, that's the only way we can actually achieve something. And I challenge every developer here to think about that. Don't try to convince your users about the technology. Try to convince them about the uses, and even better, just show them the product that actually works. As Jason spoke this afternoon, just focus on the product. But for us, we're an infrastructure company, so we need to build the infrastructure to allow you guys, developers, to build on top of our infrastructure and be ready to deploy and scale so that we can all get to 1 billion people. How are we doing it? We call it the Internet of Value. So right now, this is where we are as a company. We have Bitcoin, and on top of that, we built a business logic, smart contracts capability. It's 100% compatible with Ethereum. You can do your application using Solidity and then port it to RSK. Nothing to do that. So what's next? Well, what's next is to add some core infrastructure services. Mainly, the first one we're working on, and this is something that some people have heard of already, is a payments platform. A payments platform that allows us to transact at a much higher speed than the current Bitcoin blockchain, which means lower costs. This is fundamental because, as I said, to get to 1 billion people and get some use cases, payments, micropayments in particular, is a key element. Then we're going to do storage, directory, messages, computing, and data gateway. I'm not going to spend a lot of time in each of these. What I want to give you is a sense of why are we doing this. Our idea is to have a solution, an ecosystem ready for developers to build on top of. And we know that there are some solutions that are being developed, especially for the Ether ecosystem, that solve some of these problems. And we believe that in the future we can integrate with them and they can be also a solution. But we don't want to wait. We want to have this infrastructure ready for anyone that wants to create applications on top of RSK. So after that, the next step is to create a friendly developer framework, which means APIs, which means libraries, and which means multilingual documentation and support. Again, think about the rest of the world. Most of the billion people that I'm referring to do not speak English. So we need to make sure that their developers are easily being able to integrate with our technology by combining their skills with their language and making their lives easier. So once we have the standard APIs, the libraries, the multilingual, the other thing is have a final layer, which are some specific applications. We call it, kind of like core apps. So you could argue that some of these might be developed by third parties, and we invite any third party to develop those and incorporate it into our ecosystem. But as I said, with the core infrastructure, we want to make sure that those capabilities are within our system from day one. So we're working on building those ourselves. And if we partner with someone, that's fine. We're open to that. And by the way, RSK is an open source project, so we're very friendly with partnering with other solutions. And then after that, we create an ecosystem that has a seamless integration of core applications, that has infrastructure services, and it makes developers their lives much easier to build distributed applications. And again, when you think about libraries, what we're thinking is we would love for application developers that have no experience with distributed apps or with how blockchain works to be able to use their current languages and program in those languages and then interact with the distributed services that we run on our platform. that's how we see this ecosystem growing in the future. So the last thing is, once we have all these infrastructure systems in place and we launch it and the application developers start building our applications, we also believe that there is value in expanding this model to other blockchains. Because at the end of the day, there are some blockchains that are currently smaller or they're starting in different parts of the world. And if you go to China, there are blockchains that are mainly Chinese-based, and they have a big developer community, and they are pushing for that. If you go to other places of the world, it's the same thing. So what we think is, okay, if we want to create the 1 billion user platform, we need to bring those developers to the world. But we don't want them to drop whatever blockchain they are working on and move to ours. We think that that's kind of like forcing them to do something that they might not want. So what we want to do is we want to create a way where we replicate this model. And we're starting with Bitcoin, but then with the same approach, we're going to move to other blockchains. And the way we are choosing which blockchain is next is going to be based on the communities and the demand for those services in the communities that we're working with. So to finish, our company is called Rootstock. Rootstock is a type of plant that if you see it from above the ground, you think that there might be many. So you see different leaves. You think that there are many leaves. Each leaf seems to be their own plant. But underneath the ground, there's only one root. So it's the same plant with multiple leaves that look like different. That's what we want to represent with this. We're very excited. We're growing. And we're happy to partner with any developer or any other platform that wants to work with us. So I'll be down there with a beer. Come see me. Thank you.
Hello. Whoa. That's loud. How's everyone doing? Great. By the way, this was awesome, Block V. Good job. I've been doing this all day. Hope everyone else got one of these fidget spinners. Right? These are pretty great. My name's Adam Draper. I'm the founder and managing director of Boost VC. We've been investing in Bitcoin, blockchain, crypto-related asset product things for about 5 years now. I was the first investor in a company called Coinbase. Actually, I have a very unique perspective where actually I learned about Bitcoin from the CEO of Coinbase. So Brian Armstrong sat me down at a coffee shop and he got to tell me about this thing that was going to revolutionize the world. And for all intents and purposes, the excitement here today is all about that. Wait, I meant to actually give myself a selfie. Give me 1 second. We're chill. Okay, we're good. Here, wave or something. Someone. Yeah. Perfect. I'm a fourth-generation venture capitalist. Which means, well, yeah, you guys know what it means probably. My great-grandfather was a venture capitalist, my grandfather is a venture capitalist, and my dad is also a venture capitalist. So, and yeah, so that's what I am. And I'm the host of the Boost VC podcast. If nothing else, after this presentation, listen, please. It's doing well. It was sort of a fun thing for us, and now it's actually a big part of our marketing, trying to attract deal flow. Okay, so what is Boost VC? We're a venture accelerator. We have a programmatic approach to investing in startups. Every year, we have 20 to 25 startups go through a program in downtown San Mateo. We provide housing, office space. We invest in startups. It's awesome. It's really fun. Well, I mean, more than that, we've backed, through the accelerator, we've backed things like, oh man, EtherScan. Has anyone here used EtherScan? Like, yeah. My Ether wallet? Like where are those fools? And so, like, you know, we've been sort of a trusted emblem in the space for a long time. We love the crypto space. It's like a piece of my arm. I've been in it for so long, and it's so fun to see it thrive in a way that it is today. So we have a portfolio of 200 plus startups, and we've just been a huge ambassador to Bitcoin in the blockchain space for a really long time, and crypto, I guess, is what we call it now. I've been through all of the words, so sorry if I'm old-fashioned in some ways. So what we're looking for, I wanted to quickly say what we're looking for, and then I have a more fun, like I felt like, you know, there's so many great people who are speaking on the stage, and everyone's taking it so seriously because it's like now a thing. I sort of miss the good old days a little bit. So I decided to have like a fun part of my presentation too, if you guys are okay with that. Yeah. Someone like in the middle say something. Okay, good. But what we're really excited about are infrastructure like the MyEther wallets and EtherScans of the world. I feel that that's really the next phase of the blockchain development because those are actual apps interacting with a blockchain. UX, UI, I think these are huge things to overcome. Technically, decentralized apps, for all intents and purposes, they suck for users. So I want to see the companies that are going to change that. And then if you aren't doing an ICO and you're in the space, my email address is adam@boost.vc. Half kidding. Okay. But here, this is the part that you're all excited about, obviously, because you're listening to me still. But you're in my world. I got this for 10 minutes no matter what. So you might as well enjoy it. So this is the 10 rules survival guide to crypto. Because I've been in this space for about 5 or 6 years, and this is really me welcoming all of you to the space. Even if you were in it before me, which probably some of you were. And so here it goes. Rule number 1 of crypto. Never stop talking about crypto. Yeah, I mean, this has really done us well. We are incentivized by a protocol to talk about it. It's fantastic. You know, I've been talking about Bitcoin and like the price went up. What? That's crazy. And so just don't stop talking about it. We are the marketers for this entire industry. You are a node in this mechanism that is being built out. So please keep talking. It spreads the dream. Rule number 2. There are 10 of them. Oh, I already said that. Buy some Bitcoin. Sorry, it drives me nuts when someone is pitching me about Bitcoin and they don't own any Bitcoin. So buy some. If you don't own any, sign up for Coinbase, log in, hook up your bank account, just, you know, press that good old buy button. And Ethereum too while you're at it. Because you'll at least have some understanding of what everyone's talking about. Yes. Rule number 3. Everyone's already, you know, we'll find out what it is. Interchangeably use the words Bitcoin, blockchain, crypto, network, and distributed ledger. No one will question you. It works incredibly well. This network is distributed with a ledger, and it's built on a blockchain. All of those mean the same thing. Token. Rule number 4. Good. You guys are waking up a little bit. Me too. Constantly talk about that one time that you met Vitalik. Everyone has their one time. I met Vitalik. I met Vitalik Buterin in North Carolina at a Bitcoin conference where I didn't believe Ethereum was going to be a thing. And I am very wrong. I am very welcoming of saying that, which is, we're not always going to be right. I'm just excited about the entire industry. So I find that this is a topic of discussion that happens in every single Bitcoin conversation. It's like, I met Vitalik last week. I was at dinner. He was there. Didn't talk to him, but I was there. He was there. Yeah, he started Ethereum. It's cool. Rule number 5. We're only halfway. Argue about how forking is a good idea. Rule number 6. Argue about how forking is a bad idea. What the fork, guys? It's fantastic. Actually, to be fair, one of the reasons that I love the crypto space is that it's so passionate. And honestly, where those friction points are, that's where innovation happens, because you create this confirmation bias. You stick your heels in the sand, and you're like, no, I'm right. And then the other person's saying, no, I'm right. And then Twitter blows up into a big old chaotic mess. And then everyone builds something cool. And that's basically what I'm betting on. I'm betting on really smart people debating, proving themselves right. And that's what this entire ecosystem is about. So you guys are a part of that. So welcome. Rule number 7. This thing's falling off. Having met Vitalik Buterin is not a qualification for a resume update to Crypto Advisor on LinkedIn. So I've been seeing a lot of crypto advisors pop up on people's LinkedIn profiles. It'd be great if you were in the industry for a little while before you pop up as that. This thing's falling. I'm just going to hold it. We good with that? Hello. We're good with that. Okay, we're going to have this one instead. Okay. Wow. You in the back now can hear. Okay, next. Rule number 8. Don't start a crypto fund. You'll lose to me. But they're great. I like anyone who's supporting the ecosystem. So keep doing that. And really, it's about smart people building big ideas. And so anyone who is starting a crypto hedge fund, don't. Rule number 9. Craig Wright is not Satoshi. I've never met him. I have nothing against him. Just if that was even a thought. I thought I'd put it in my 10-slide deck about what you should be thinking about as far as joining this ecosystem. Rule number 10. Build value. Yeah. This is the only one that really matters. I was just going through the rest to see if anyone was listening. Really, this entire system is built on people. And I think sometimes that's forgotten, is that there are technologists and they're enthusiasts. It's like enthusiasm meets intelligence meets, it's like a really exciting place. And that's why everyone gathered here for this conference, is that it's a really exciting thing that there are a lot of unknowns for. And everyone's trying to find the answers, and I don't have all the answers. I have a list of 10 things that barely make any sense. But what I want everyone to do is I want you to participate in a way that's building value, that is actually we are trying to progress the system. By the way, if a token doesn't make sense for your product, it's going to bite you in the ass. Like, it will. And maybe it's not today, maybe it's not tomorrow, but like, build true value. Set out to solve the problem you set out to solve and solve that problem. And sometimes token is the answer. And we will support that. We've supported a lot of ICOs. We've supported, well, like a small subset of ICOs. But we've supported a lot of people. And we really, really love this ecosystem and everything that's been built. And it's incredible because, like, when I started, which, you know, I'm not that old, but like, when I started 5 years ago investing in the space, I would say, how many people here have heard of Bitcoin? And like, 4 people in that corner would be the people who are raising their hands. And now it's like, how many people own Bitcoin, Ethereum, and like every other crypto asset on CoinMarketCap? And I'm sure everyone here would be raising their hands. Like, fintech has changed to crypto. And that's a really exciting thing because we're really upending this industry. So, my name's Adam Draper. I'm founder and managing director of Boost VC. And thanks for listening to this. Have a good one.
Okay, hi. I'm not going to quite do what Adam did. I'm not going to attempt to follow it. So what I have to say is I made one big mistake, and I would advise you not to do it. Don't send your pitch deck to your legal counsel, right? Because it's going to get cannibalized, and I got back was absolutely a completely different presentation. Yeah, so if you, as an industry, we've got to find out how we can get rid of lawyers, right? So if you can get rid of lawyers, we're gonna make a lot faster progress than we're making currently. So what we've been looking at is how can we strap on the existing architecture that we've got for legal and frameworks without having to actually get to the point. So we're currently at a point where you launch a token and you suddenly have to go through, is it functional? Is it equity? Does it have certain characteristics that may be construed in different jurisdictions? And one of the things we've decided, and we've gone back and forth to regulators, in particular in London, with the Financial Conduct Authority, and they've actually come through and said, look, there is nothing stopping ICOs and tokens becoming a part of the existing crowdfunding system, right? There is an existing piece of legislation that exists in most jurisdictions, especially in Europe, that you can actually launch your token within, right? And you then are outside of this remit of having to waste endless time doing token economics, doing crypto economics, having to go to and fro, and trying to add function or new features to a token that what you end up is having a very different product than what you start from because you're trying to follow a regulated landscape, right? So investing in businesses as a crowd token is what we see as a growth prospect for tokens throughout, right? So what do we do? The aim of this presentation is what is very different from crowdfunding and what is what we have here is token generation events or token sales or ICOs. And in fact, very little, right? So what are we doing? We're reviewing companies seeking capital, standard what we do in crowdfunding today. We take a white paper from established startups or SMEs or companies that are already existing, and we ask questions directly to investee businesses that want to participate in their future, right? So I'll go on the next slide, right? Crowdfunding, right? It started in 2007 with a reward base, so you're all familiar with Indiegogo, right? And then it moved very quickly forward to equity-based crowdfunding in 2012. That's around the time that Europe became the center of this crowdfunding as regulators who wanted to capture this new share started to develop legislation around it. So largely, crowdfunding has got a lenient approach, a far more lenient approach than you generally get from regulators in token sales or token generation events or ICOs, whatever you want to call it, anything based on this new economy that we're establishing, right? Because it's largely based on, from a regulator's perspective, is something that goes out to family, friends, communities, and people that you're in touch with, right? So what the irony is that no one has actually launched a tokenized platform as such directly within the confines of the existing crowdfunding legislation. So we went to our regulator and we said, well, what is it? And they've actually not 98%, 99%, and we would say pretty much any jurisdiction around the world that I've traveled to, they've not actually had any submission that said we're actually putting this token event as a crowdfund within your crowdfunding legislation, right? So now, the advantage with you doing it within a crowdfunding, if you're thinking of doing a token generation event, is that you can give them equity and you can give them tokens. You don't have to draw away from giving equity. You can give a different slice of equity. So you can say we release 5% equity and 50% in tokens or whatever mixture you want, and you have got none of these restrictions. I would say most of the legislation in Europe, the legislation we've looked at in Asia, and America's yet to be determined, but I would think it would follow suit. So the future, from our perspective, and looking at how a regulator is actually looking at this space, is that crowdfunding legislation will be transposed and brought forward and be included within a token generation event. Okay, so the platform to be established on the blockchain, what's the advantages? I'll quickly rush through that. You're all familiar. It records all transactions, is immutable. And the first example we're going to be doing of this is within the UK, where we've got a regulator who's extremely lenient. They've got a very positive attitude. It's a look and see. It's a sandbox type approach. Bring forward, bring your ideas, and they want to actually see this industry grow within the UK. Right? So the actual model that we establish is going to be pretty much the same. You choose the investment. You decide if it meets your criteria. You sign an electronic documentation. And most importantly, right, so KYC and AML is going to become a standard part. We call it whitelisting now, right? So you whitelist all your participants. That is pretty much what would be traditionally KYC and AML in crowdfunding. So you are seeing an alignment of the two industries, if not in letter, but in reality, right? So, and the only difference here you're transferring your funds in crypto, right? And as we're seeing, you just said, Draper, on Coinbase is allowing you to interoperably swap your fiat into crypto and back and forth. So, you know, that friction we've had for the past 3 years is largely disappearing. So, what's the advantage? What's the advantage of doing it within this token generation event, as opposed to doing it just as a traditional crowdfunding raise? It's largely based around the ability that you can use a smart contract, right? So you can use the ERC20-like, and more importantly, you'll see the rise of ERC223, much more efficient, and you're able to do a few interesting things that I won't go into. But, you know, and as why we're all here, most token events allow you to create a secondary market, right? So this secondary market is what This differentiates traditional crowdfunding from an ICO. You're immediately able to go and trade this token. Right? And currently in all the legislation we've analyzed, there is nothing that actually stops this as a prerequisite from the regulator for not having to do your ICO within a crowdfunding platform. So what the big advantage is you can own equity as well as tokens, right? So you can have these ICOs where you actually can have a vested interest inside of the ICO and you can control the direction. So it's going to start to bring a greater degree of stability and a greater degree of actually being able to contain and move forward in a direction where currently you buy into the token, what actually happens, the direction of the platform and who actually manages it, who actually controls it, is largely outside of your hands. With the new model that's emerging, you're actually going to be able to have key shareholders, key influencers, having a bit of equity, possibly a board seat, possibly a non-executive directorship that can actually steer the ship and ensure those funds are managed correctly. Right, and going forward, you can actually offer dividends, right? You can actually have a mechanism in there in your smart contract that can pay out dividends on a quarterly, yearly, monthly basis, right? So, you know, in terms of this, most of you are familiar with crowdfunding, so I won't go in it in depth. But, you know, you create a campaign, you explain the business, you highlight the opportunities, you list and, you know, the model we're here, you have a token exchange type market where you list them on there, right? So investee businesses can actually put up equity, so they can actually put in 10%. And the interesting part is, what you're actually doing is you're tokenizing that equity, so you're fractionalizing it. So you can put 10% up and you can create 1 billion tokens from that. So, you know, the actual contradiction is not there. It's an imaginary construct that we've put in ourselves. It's not actually a reality, right? So there is some caveats. So currently under the legislation, if we want to do it fast-track and streamed, up to 5 million will be the hard cap. So if you want to raise up to 5 million and you want to do it in a quick, efficient manner, then you can do it within the legislation and you can do it as of tomorrow, right? If you want to raise above 5 to 50 million, there's an increased level of due diligence. You have to have your prospectus vetted and authorized, so, and any documentation agreed by the regulator. But for this very much smaller, much more manageable rounds, what we feel, up to 5 million, which is a good number, then actually within the current legislation you can do that off the bat. And more importantly, not to forget, you get access to a crypto community. You get access to, they predict anywhere between 10 to 100,000 new active participants join the crypto community every day, right? So you get direct access to this community as well as staying within the current crowdfunding confines. You've got to bear in mind, if you are giving equity and you are allowing equity, the investors are shareholders and will have a greater degree of rights, right? You can put them in under sort of B shares and various other share instruments that sort of contain their rights, but nonetheless they have rights, so you will have a greater level of transparency and due diligence to offer your investors, right? On the flip side, the community is able to help build the business because they feel that much more involved and have that much more say. And the part that I had to largely strip out, but which is that the investors can actually act as a DAO, right? So this investor base can become your decentralized autonomous organization, which can carry out a lot of the functions that you don't have to internalize, right? And a larger investor base is going to create a larger community as a result. So the future's arrived. What you've been starting to see in this first instance is the first sort of this, what we call whitelisting process, was this sort of inclination to move towards what the regulator is requesting. And the the regulation that's been done on the soft track, which is forcing everyone to create a utility, may not necessarily be the best step where you can actually have this dual solution. So utility is great where there's a need for utility, but to force utility on a token that doesn't require utility is kind of what the problem we're solving here, right? And actually the regulators, from our conversation, the regulator is very enthused by the fact that there is a secondary market. And that secondary market ensures that there's liquidity, there's access to it. That, you know, we were originally in the anticipation when we were going to meet the regulators that they would be fearful of a secondary market, but actually that's something they want to actively encourage within the space, right? We will be doing a POC just to sort of test the water with the regulators around the world and seeing what they feel, what we can feed back into the sandbox. And we'll just have a sort of working title as Token X on that, right? So yeah, just before I wrap up, all eyes don't have to go in one direction, right? There's no need for us to look at ICOs as an isolated event, just based within crypto, just within blockchains. No, there's an existing, as big, if not larger movement, crowdfunding, which can be absorbed into crypto. As a result, the actual marketplace is going to potentially be 10x the size we've got currently. And we can do that today, right? So thank you for your time, and I look forward to speaking to you all soon.
Hey, BlockCon, how you guys doing today? Hey, can we get a round of applause for Kurt Kumar and the team here at BlockCon? I think this has been a really, really great conference. He's chilling backstage right there. So my name is Jason King. I've been in the blockchain space since before it was the blockchain space. I was in the Bitcoin space in 2010. And this conference has been really interesting. There's a lot of really great startups here, and there's a lot of cool ICOs and funky stuff going on in crypto. And in those things, those projects may appeal to you or they may not appeal to you. They might be something that you're interested in doing or they might not. But what I'm going to talk about is something that's going to affect everyone here in this room, because I'm going to talk about the largest problem that we have as a blockchain community. And it's basically this concept, is that the demand for blockchain developers far exceeds the supply. And this is literally everybody's problem. So last year, we raised about $500 million as an industry. And of that, ICOs made up about half of that, $248 million or so. Now this year, and my deck's already outdated, but this year we've raised about $2.3 billion as an ecosystem, and about $2 billion of that is in ICOs. Now that sounds good, that sounds exciting, we're raising a lot of capital. But this is where the issues start showing up. In a survey of 200 Fortune 500 executives, 188 of them have plans to implement blockchain technology, which sounds fantastic. But this little sliver here at the end is the problem. Of those 188, only 12 of them thought that they could actually identify the talent to actually implement those blockchain technologies at their company. And this is the problem. Currently, for every one qualified blockchain developer on Earth, there are 14 available jobs for them. And if you couple that with the fact that over the next 7 years, as an industry, we're going to grow 16 times. We're working at a 14x deficit right now, and we're going to hopefully grow 16x over the next 7 years. You can start to see the scale of this problem. Where are all of these engineers? What did we raise $2 billion for in ICOs? It doesn't seem like it's for deployment on engineering, because these engineers fundamentally don't exist currently. So the blockchain ecosystem has been very slow to develop new developers. Basically, there's a couple of reasons for that. Blockchain tech moves very quickly. So any sort of normal curriculum, by the time it gets implemented, things have changed. But the main reason is that currently, if you're a blockchain developer, you're in production. You're working all of the time. So stopping to train new developers is not high on your priorities list. And then there's no current lack of, so there is a current lack of industry standards for certification within this industry. So what's the solution? So when I recognized that this was a huge issue, started talking to all of my friends, and we sort of put our heads together, and no one really had a really good solution for this. But luckily, I met a man who's in the audience somewhere, John Souza. Anyway, John is the founder of Kingsland University. We actually ended up as campmates at Africa Burn together. And John is the founder of Kingsland University, which is a fully accredited U.S. university in Atlanta. And I basically pitched him the idea that, you know what we should do? We should do this. So we have started the Academy School of Blockchain Development at Kingsland University. It is the first fully accredited school for blockchain development in the world. And basically what our premier product is we've created a 6-week immersive boot camp where we take existing software developers and we train them up on blockchain best practices. So you go in as a software developer and you come out as a blockchain developer. And so we are partnering with the people that are building sort of some of the tech, some of the core technologies of this industry. People like Craig Sellers, the founder of Tether and Omni and BlockV, Vatomic, Stephen Dack from Ethereum and CryptoKit, Dan Larimer from BitShares, Steemit, EOS, Gabe Kaufman from RSK Labs. And we're actually going directly to the people that are building the technology and saying, hey, help us building this. And we're actually having them as advisors help us build the curriculum to teach this new generation of blockchain devs. In addition to our in-person boot camps, we'll be doing cutting-edge online learning. So we'll be able to teach this to anyone worldwide. And we are accredited from the Southern Association of Colleges and Schools. So in the United States, there's 7 accrediting bodies. And in the Southeast, everything's done by the Southern Association of Colleges and Schools. And because of that, for the first time, you'll be able to use Title IV and Title IX funds. And so what that is that's all of the free financial aid for students and VA benefits. So those billions of dollars in resources will be able to be utilized for people that are interested in actually learning how to develop on the blockchain. We also have a SCORM-compliant learning management software system. And what SCORM is it's basically like an API for accredited institutions. So once we create content for it, it can actually be syndicated out to other accredited universities worldwide. So Kingsland can actually make the content, and then you can actually see it at UCLA or Pepperdine or really any place around the world. It can actually start showing up in their course catalog through syndication. Another key component of what we're doing is we'll be doing career placement services. We're working directly with blockchain companies so that we can place our graduates with them upon graduation. So they're getting meaningful jobs directly into the industry. And the other component of that is human resource services, is working with these companies to identify their specific needs and make sure that the training and education that we're providing is directly meeting their needs as an employer so that that is continually moving forward. We have a great team of people. We brought in Jinglin Wang, who was running product for blockchain at NASDAQ, Mo Levin from Keynotes, Alex Lightman, he's a fantastic futurist. He lives here in Santa Monica. John Souza, actually, he's here in the audience. Great team. Brock Pierce is one of our advisors, and obviously me down there in the corner. And later on this year, we're going to be doing a token sale. And so basically, we will be issuing Academy tokens, and the tokens will be able to be utilized for tuition, for any tuition service payments at Kingsland University. And we will also be able to pay human resource and career service placement fees for using those tokens. And we actually have a pretty cool, unique token mechanic, which is that any tokens that we take in at Academy, that we take in for tuition payments or we take in for service payments, 70% of those tokens will be burned immediately. And then 15% of the tokens will be put into a dedicated scholarship fund for education. And then 15% will actually be put into a community development fund. And the funds in the Community Development Fund will actually be managed by a system similar to the Dash Masternode system. So if you hold 3,000 Academy tokens, you become an advisory node. And that allows you to actually create a proposal and vote on a proposal on what the elective curriculum that we're teaching at Academy should be. So if you have a blockchain company and you're interested in us creating classes to teach stuff that's specific for you, you can actually voice this by holding an advisory node and actually voting to create that specific curriculum. And that's all we're doing here at Academy. So I'm sure that some of you guys have needs. If you have blockchain human resource needs, if you have interested in partnering with us for educational resources, please come talk to me, and you can find us online at kingsland.academy. Thank you very much.
Hello, Bitcoin hardware wallet. Santa Claus is here again. This is my third time here. Most people left already. I barely see maybe about a third left. But anyway, I'm here to talk about Bitcoin. I know a lot of you probably have some Bitcoin. I want to ask, how many people here do not have Bitcoin? I want to make one poll. If you raise your hand if you don't have any Bitcoins here. So almost everybody has Bitcoin. We have a hardware wallet stand out there. I was so surprised there are so many of you guys are buying hardware wallets, and all of you have Bitcoins. But you're buying it today? What does that tell me? I feel you guys are kind of ignorant or maybe not so serious about this security. The reason I got into this business was because I lost Bitcoin. It was painful. Almost 7 Bitcoins. Now it's worth more than $30,000 today. I don't want any of you guys to experience that pain. Only when you realize you lost your Bitcoin, then you need to get a hardware wallet. Anybody that thinks about investing in Bitcoin or other cryptocurrencies, the first thing they should be thinking about is security. Because that is one of the most important things. Before you realize Bitcoin hits $1 million, if you didn't even secure that, you could have lost it. How painful is that? Why Bitcoin has value, I want to say, why do people want to participate in this Bitcoin network? We take it for granted in the Western nation. We have so many financial services that we can access every day, but we don't understand how dire situation that these people in the third world countries, such as Venezuela, where they're killing dogs and cats and killing birds to get by every day because they have a corrupt government, they have a fragile financial system, that they're not able to save their fortune or their money, not even to live on. So what they're trying to do is they're trying to smuggle these Bitcoin mining machines, trying to mine Bitcoins and then exchange for food on Amazon and ship it back to survive. Bitcoin is an alternative for all the current systems that we have. it's a privilege that we all can participate. Where currently the system is only a few of the powerful on the top who can make a decision on how much money they can create and then dilute the monetary supply. That's why all the money that we have today, you see it's losing purchasing power. Now, Bitcoin gives us that alternative to store the value of your wealth. When you have an alternative like this that you don't treasure, you don't want to participate, it's a loss. I'm a huge believer in crypto, in Bitcoin, because this is first time ever in history that the whole world comes together to collaborate, building this one chain, or we call it a distributed network, that is secured by almost 9 million trillion calculations per second. That's how much hash rate there is in the Bitcoin network. And it's distributed across the world. This chain can mean a lot. Obviously, the current use is for currency. But there could be so many more things, so many applications built on top of this. This is not a centralized data service or data center that can store a biased form of information where nobody can check on each other. This is all very transparent. Later on, we could see your house titles or maybe your marriage certificate being transferred and digitized and encrypted with as little as 1 Satoshi. That could carry that property. This is a very, very powerful technology that we have never seen in the history of our society, basically. I came from a financial background, or actually I studied management in school. When I come out of college, I work at two jobs, which I really hated it. It was a 9-to-5 job. And then I started to invest in stocks in 1999. Then I found out investing or investment that can yield me an opportunity where I can earn a passive income versus I don't have to push the clock and I have to clock in and clock out every day to earn income. This eventually leads me to the investment of a cryptocurrency. And I came across with Bitcoin in 2014 at a CES show in Las Vegas. When I stopped by the booth, I remember it was BitPay. They said, "Do you want $5 in Bitcoin?" I said, "How do I get it?" He said, "You just download this blockchain wallet and then I'll send you $5. From that point on, I was very much attracted to Bitcoin. I was basically obsessed for days. I searched up almost every single video on YouTube and then learned from the experts. Over the course of 3 years, I found out so many people, so talented, are investing their time and energy into this space. Now, I don't know how many people here that are actually doing a Bitcoin-related business, but I'm sure you have some interest in this space. Otherwise, you wouldn't be here. I know it's not cheap to be here. Because Bitcoin is so valuable and it has so high of a potential in the future, I play a role of carrying these hardware wallet. I want you guys maybe at least think about finding a way to get one of these to secure this so you don't lose it one day. Hardware wallet, they come in a very special way, or they're designed in a very special way to secure your Bitcoin by keeping your private key inside the wallet. It's a microcomputer that's dedicated does nothing but signing transactions in the inside the wallet. The key will never leave the wallet. It never touches the internet, never touches the cloud. That is why hackers cannot steal your private keys. Your Bitcoin will be safe. It is a necessity, or it's a necessary tool to have if you own cryptocurrencies nowadays. This is my strong recommendation for all the people who are thinking about investing in Bitcoin or who already have Bitcoin. If you don't have a wallet today, that you have your wallet, your Bitcoins or other coins in an exchange, you don't own the Bitcoin because you don't own the private key. The private key is being held by the custodian. So
I don't think that he can hear you yet, but I'm just checking the microphone.
We have 4 different wallet choices available on our website, in our web store. These are obviously Satoshi Labs Trezor, and we have Ledger, that's from France. We have KeepKey, and we also have the Swiss-made digital Bitbox. All these wallets are very solid. They have been Bitcoin.org certified. You can feel free to use these with ease. There has never been a record of hack through. So we feel very comfortable carrying these wallets to bring it to you guys. Make sure you guys get some wallets to secure your cryptocurrencies before you lose them. That's how I want to recommend all of you guys here today. I do not want you to lose any cryptocurrencies because they will be at least $10,000 by next year, as Tim Dripper have quoted 2 years ago on Fox News. Thank you very much.
Is this level comfortable for you there?
All right. Morning. They asked me to come and talk about network effects and how you build a unicorn business. So I'm going to go through a couple of examples, but just by way of background, my name's Gil. I was one of the early folks at eBay and have invested in a number of businesses that have built really nice network effects. What I joke is the original cryptocurrency, PayPal, back in the 90s, and some more recent ones like LinkedIn and Wikia in sort of the internet world. And then within the crypto world, I was one of the early investors in both Filecoin and Civic, and I actually owned equity in Brave and Ripple back in the old days when crypto companies would sell equity, which is kind of funny now because I'm not sure if that equity is worth anything because it's the coins that matter now. So we talk a lot about network effects and how you're building a network and the protocols, the network. And I always go back to like, well, what is a network? And having run a few companies, to me, the network's pretty simple. More consumers bring in more producers, who bring in more consumers, who bring in more producers. And as entrepreneurs, you just rinse and repeat that process over and over again, trying to sort of drive up the size of your network. You know, for those of you who are developers, we think about it much more, oh, we lose the mic. We think about it much more in a math sense. You know, Metcalfe's law and the size of the network exponentially increasing the size and the value of your network. The more nodes in the network, the more valuable the network is, right? So a payment mechanism that only has 2 wallets is not very useful compared to Ethereum or Bitcoin. You know, then you talk to investors and they talk about how hard networks are. And they say, well, it's really hard to kickstart a network effect because you need to get both sides at the same time, and neither side has any incentive to join a new network. Why buy the new cell phone that works on some new system? You know, all the cell phones either use Google or Apple, right? I don't want to use a new message system that isn't iMessage. They also worry that fundraising is really hard. Networks require tremendous amounts of customer acquisition on both sides, and they, like everyone else, believe the biggest network wins, right? You have to get to big first in order to create value, and that's, you know, again, the Metcalfe law. So I've been through a few of these, and I sort of think of it in a little more complicated fashion, which is you start at the top, you're trying to build community, you're building evangelists, you're basically trying to build people who love your product and talk about your product and help you make your product better. And what do those people do? They work with you to increase the value of your product. They give you feedback, and by being nodes in the network, they make the network worth using. And once you start increasing the value of your product, you then focus on trying to grow. And in the case of crypto, that's not only growing your user base, it's also scalability, which is one of the huge problems here. And finally, as you get scalable growth, you start to build a brand, which allows you then go back and build more evangelists and more community and sort of keep repeating this cycle. And if you look at what's happening with the ICOs, we're actually short-circuiting some of this because the ICO actually builds evangelists and builds community. So if you take the case of Civic, you know, when I invested both beforehand and then invested more at the public ICO, you actually had to sign up for Civic in order to invest in Civic, which meant they were building customer acquisition as part of what they were doing in the ICO. And then they built a community on Telegram and various other channels, although I hear Discord is now the new hot channel. You know, we're building communities around the ICO, we're building evangelists around the ICO, and so you sort of get some of that initial traction for free. You still have to build a great product, you still have to learn scalability, but then when you start building brand, it turns out everyone's already heard about you because you did this ICO, it had a lot of press, you got a lot of PR. In a lot of cases, we're all doing advertising for the ICO now, so people have sort of already heard of you long before they've used your product. So I was thinking of sort of a recent example of one I'm working with. Prize is a new company that will be starting to do an ICO most likely in November from the sounds of it. It's basically a sweepstakes on the blockchain. All the elements of a sweepstakes, escrow, third-party sort of decision-making happen on the chain. The app that you can download lets anyone enter a sweepstakes for free. The prize is more cryptocurrency. And funny enough, while I was sitting, you know, here the last couple of days talking to various entrepreneurs, they're talking about how they might be able to use the sweepstakes as part of their ICO marketing. So we'll give away, you know, 100 EOS as part of the EOS pre-ICO marketing. And guess what? The sweepstakes will end on the day of the public sale, so that if you don't win, you might be able to go and buy some. And so they've actually been working through some things like that. But notionally here, right, if there were 10 sweepstakes apps, which one would you download? You download the one that had the most, because it's too much work to download a sweepstake app that only has one. Then you join them, and then you get alerts sort of when they end that you didn't win, which gives you chances to go back in and win more. So this is sort of an example of an app. Well, where do you want to do a sweepstakes? You want to do a sweepstakes on the app that has the most consumers. Where do consumers want to go? They want to go to the place with the most sweepstakes. And so you get one of these sort of very classic content writer and content reader network effects. And I modeled it out. It looked pretty much the same as the example before, right? They get evangelists. They build a community as part of their ICO. They still have to build a product that doesn't suck. And they still have to scale it. And so things like side chains, you know, versus main chains become part of this sort of engineering problem they deal with in figuring out which part of the sweepstakes can you run on Ethereum or EOS and which parts do you have to run on side chains. But they do get the benefit of the brand building because the pre-ICO marketing brings in other entrepreneurs and investors and evangelists, which really sort of helps them early on. I was thinking a little bit about sort of like, what does this mean that these things are done for us because of the ICO? And an analogy I would use is 15 years ago, when you were an entrepreneur and you started a software company, you spent all of your money on engineering and R&D. In the first 3 years of a software company, all of the money you raised would go into engineering. Today, you start a SaaS company, And first 3 years, all of your money goes into sales and marketing. I mean, engineering is like a tiny percentage of the problem because SaaS has made the engineering problem much simpler, right? You can build a simple product and iterate on as you go rather than having to build a complicated one. And so as the formula changes, the way you spend money and what you spend your time on changes. And where software development used to be important in software, in SaaS increasingly, sales and marketing is what differentiates the good people. So how does that apply in what we do? If you're building a cryptocorn instead of a unicorn, you know, a lot of these boxes sort of go away and you're left with this little bit here, which is build a great product and don't fuck it up so that it's scalable. I mean, these seem like relatively simple things, but as we all know, they're actually incredibly hard. So I started thinking about just sort of a revised formula for what makes successful unicorns in the era of tokens. And it's really this, right? The network is still what matters. The best businesses in technology have some sort of a network effect that makes the biggest one far and away the best one. But tokenizing helps with a bunch of things, right? Initial customer acquisition, not as hard now. Turning regular customers into evangelists, like, happens by default. All the people who own your coins are already shareholders and they want to help. A lot of the PR noise that you use for credibility and branding, you get for free as part of the ICO. And recruiting the network, well, it turns out we all reserve some money for network growth and growth hacking as a way to sort of bribe people into joining the network. And whether it's giving them discounts or paying people for distribution, you know, all of the best ICO companies are now taking a portion of their tokens and setting them aside for these growth budgets that you used to have to raise venture capital for. So, you know, this is probably a truism. If you've talked to a lot of investors in crypto, you'll hear it's all about team, it's all about the tech. But this is actually why it's all about the team and the tech, is the other things that used to be hard are getting increasingly easy as the ICOs sort of make them easy to do. And what you're left with is building products that have real value and the scalability problem. And I would say there's two pieces to scalability in the winners. You have to grow your customer base, but you also have to technically be able to figure out an architecture that allows you to grow your customer base without falling over. And so that's sort of a quick version of the unicorn formula. Thank you.
How's everyone? Are you guys happy? If not, we can get some more beer. So people who are sitting in the back, do you guys want to just come in the front? Because it's too hard to see you guys over there. Why don't you guys just come up front? I mean, the VIP guys don't care. They're not even here. So just come on up front. Can we have some of the volunteers get the folks to just come up front? Yeah, just remove the barrier and just come on. We don't have all day, guys. Come on. So we haven't done this kind of a format before. Basically, what we are going to have is a live Skype call, and we have Scott Santon on Skype already, and we have Greg Slepak here. Scott, you look really handsome on the big stage.
Thank you. I can't see it, but I believe you.
But you're on a giant video wall right behind us. I wish I could show you this. I wish there was a camera that could, yeah.
Somebody take a picture or a video.
So this conversation is about universal basic income. And I just want to talk to Greg and Scott and understand why is it important to us, where is it headed, and how fast it's going to come through in the next couple of years, and just basically have a quick conversation before our final presentation by Tone Ways. Is that okay? How many of
Are you guys awake?
So how many of you here are aware or know about UBI, or at least have heard about it? Who wants to ask Scott a few questions on that? After we are quick, okay, so just make sure you're right here and we'll give you the mic. So Scott, tell us what is UBI, and just give us an overview of that.
So basic income is a form of Social Security that's a stipend that's provided to everyone individually without conditions. So this would be provided universally without work requirement and will be earned in addition to all income, as in it's an income floor that all income can be earned on top of.
Got it. So isn't it more or less like Social Security?
Well, yeah, Social Security is essentially like a form of basic income with an age requirement, although it's not an equal amount per senior. So universal basic income would be the same amount, say in the U.S., about $1,000 per month for everybody, for all adults mostly. And then you can either have an amount for children as well, or just for adults.
And in your opinion,
so that I think
so what's wrong with the Social Security? I mean, if the age requirement was not there, do you think it is similar to UBI?
Well, there are definitely problems with Social Security because, first of all, not even all seniors get it. And there's also the big variance. So especially like if you look at gender differences. So for the most part, because women do a lot more care work at home, then they're not able to put away as much income through employment, so that after retirement, they earn less than men. And that is a problem on its own. And then, of course, there's just a wide variety. So that, say, some people are earning less than $1,000 per month of Social Security, and then some are earning, up to, like, say, $3,000, which is pretty much the maximum right now if you've been able to put in, the full amount through your whole working career.
Greg, I know you're working on group income, group voluntary income, if I'm correct.
Group income, yeah, that's correct.
How is that different from universal basic income, or is it the same?
That's a great question. So traditionally, the concept of a UBI is a government established, legislated, and operated program for an entire country. And the difference between that and group income is that with group income, we are just creating what is effectively a decentralized accounting tool to let any group of individuals, for example, a group of friends and family or like a church community, to provide themselves with a basic income. if they want. And it operates on precisely the same principles that basic income operates on. So it's kind of a voluntary tax, the purpose of which is to ensure a minimum safety floor for all members of the group.
Give us an example of what is that, like in what instance would it trigger that safety net? Is it an accident, death in the family? What are we talking about from a safety net perspective?
So the safety net is not triggered. It's always there. The idea is that as long as the group has enough income to cover this minimum amount, which we call a mincome, because it might be smaller than a basic income, it's up to the group to decide what that value is. For example, a group of 5 people might get together and say, well, we want to make sure that everyone in our group is covered monthly $50 minimum, and that'll be our mincome. And together we'll say, well, here's how much I have extra income at my disposal that I can pitch in, and somebody else in the group might be, for example, single mother who is juggling with various responsibilities and really needs to be at home taking care of the kid, not working a 9-to-5 job. She would be supported by this group and whatever they decide the income is.
So would the people in the group be putting in that $50 into the pot every month, and it's a flat amount per member, or is it a graded, scaled amount that everybody's putting in the pot for that person who needs this?
Yeah, so I like to use a visual to describe how the actual algorithm works, because it's really simple. If you imagine the incomes of all of the members sorted by, from the least amount to the highest amount, so a bar graph. So, it might look like this. The mincome will be a line, and below the line is everybody who's making less than the mincome, and above the line is everybody who's making more than the mincome. And then the algorithm looks proportionally how much more are the people who are making more than the mincome making. And based on that, it does its best to lift everybody below the line to the line.
Interesting. Why should we care about this? Like what's happening, or where is this, why is this even in the conversation?
Oh, that's a wonderful question. This is a wonderful place to ask it too, because one of the reasons why a lot of people are here is because of tokens and cryptocurrency and all of this other stuff. And I notice just how much of their human activity is devoted to revolving around obtaining funds, and all of their cognitive capacity is focused on this problem of how do I obtain this money so that I can go do that thing that I actually want to do. And the idea behind basic income is, well, that is a cognitive load not just on everyone in this room, it's a cognitive load on all of humanity. And basic income removes some of the anxiety from people's lives so that they can more easily pursue those things that they want to pursue.
You're basically saying that mankind is at a stage, like our civilization is at a stage where we should not just be working and paying bills till we die, but we should have the freedom to do what we would like to do, but at the same time we don't have to worry about paying our bills, and we have some kind of a amount that's given to us.
Effectively, yeah, sure. Although there could still be bills that you might be paying, the idea of basic income is just sort of the basics, covering the basics. It's not going to get you, the amount of income that you can expect from a full-time job. But the point is it removes the worry of having to ensure you're not going to starve to death or be out on the streets.
Got it.
Yeah, a good way to think about this is Maslow's hierarchy of needs. So if you cover the basics, then once people are no longer just seeking to meet, just survival, then so much more is possible, because people have much greater needs that are above your most basic needs. People seek meaning and connection, and just like with blockchain, like Greg was just talking about, there's so much work that people want to do that they're effectively prevented from, and this work could be paid or unpaid. And right now we live in this system where it's like the only work that's seen as valuable work is actually employment. And this opens up that possibility to actually do so much more that's actually work that we don't currently see that way.
And Scott, is the government trying to do any of this? Is this a private initiative? Why is it not or is there a movement behind it that's
Oh, sure. Yeah, so this is something that was bigger and actually very close to happening back in the U.S. in the 60s under Nixon proposed a version of a basic income guarantee, and it's back now because of automation. People are hearing about what are the possibility of half of all employment automated in the next 20 years. So people are thinking, okay, so if there's going to be so much less work to do, how does that affect the economy? How does it affect people's lives? What kind of options do we have? So countries all over the world are actually really starting to look at this, although US is looking at this from an automation perspective, but that's not the only way to look at it. Finland is a really good example of another way of looking at this, because they're looking at it from a more of a new present of work perspective, where the existing system actually prevents people from, or at least disincentivizes people from taking paid part-time work, temporary work, these kinds of things. Because a means-tested system that all governments use essentially right now, that is actually pulled away when you accept employment. So if you're going to lose whatever benefits that you're receiving, if you accept or do some kind of employment, then why would you do that? Especially if you're thinking, okay, so this is temporary, I'm going to go back and I have to actually go through this process again, and hopefully I'll get it, maybe I won't. So it's like a very sticky kind of system. Basic income isn't sticky at all. It allows people to actually go to and from work. It's always there no matter what, so you can, accepting any amount of work actually leaves you better off. So that's really, Finland is testing that actually right now for the next 2 years, where they're giving a group of people who are unemployed what is essentially a basic income. So if they accept work, they keep that. They don't lose it for actually doing work. They keep it. And so that's the way they're looking at it, and that's one of another way to actually look at the benefits of basic income is this more of a 21st century safety net versus right now where we've essentially developed our safety nets around a old version or old thinking of work that no longer exists, where people just don't work these careers for 40 years full time anymore. There's a lot more variability in work, variability in incomes, and we need to actually recognize that.
Scott, how did we survive in the last couple of 100 years? I'm pretty sure that in the last few 100 years, printing presses have, well, not printing presses, handwritten, people used to write books in the olden ages. That got automated. How did they survive during that time, and how is the automation that's going to hit us now different? I mean, I'm pretty sure in the last 2,000 years of our civilization, we have gone through automation of many different, we had industrial age as well, so the cotton mills went away. What happened to those folks in those positions, and why should we care about it now?
Yeah, so the difference now, there's not only a difference in the type, so that back then you were more about automating muscle labor, and we've actually reached the point where we can automate mental brain thinking labor thanks to artificial intelligence. And so it opens up a whole world of work that's not only low skill, but medium skill, high skill, everything can be covered. You can automate, and we are automating lawyers already and doctors already. Like, this work can actually be done now, artificial intelligence. So that's one big difference that didn't exist before, because before we were able to shift from, say, manufacturing to service sector work, and before that, it was from agriculture to manufacturing. But service sector work is really kind of the end of the road as far as like this kind of giant sector of work that's possible. And the big difference also now is the rate. It's very important to understand that the rate is different. So back in the day, you didn't see like ginormous eliminations of labor and hoping that this new labor could be created at the same rate. So if you look at, say, truck driving is a really good example in the US. And this is something with millions of people who actually have this as their job. And it's an ecosystem where other people's incomes depend on the existence of truck drivers. So we're looking up to potentially, say, 10 million people who could be affected by the existence of self-driving trucks. So essentially overnight, in like the, realistically it'd be a course of years, but in the big scheme of things, overnight you could eliminate all of these jobs. And are all those people going to immediately find new jobs again? I don't think so.
Yeah. I'd like to actually add to that it's not necessarily the case that people did survive those previous transitions. I'm sure a lot of people ended up faring quite poorly. And if we had had basic income back then, they would have done a lot better. There would have been a lot less stress in everyone's life.
So Scott and Greg,
I just want to add. Can I just add something to that too? It's really important because we already are seeing the effects of automation, and we're already ignoring those effects. So people are being put out of work. If you look at the small towns around the U.S., rural areas, people who voted for Trump in hopes of getting incomes back from lost work, like these real effects. I would say even the opioid crisis is a result of this as well. Like there's a lot of effects going on, and you can't just say that, oh, because there's, say, more jobs created elsewhere, and maybe those don't even pay as much, and maybe they're just people don't even like them as much, and they're far more insecure, that everything's okay. You have to look at beyond just the unemployment rate.
So Scott, what you're saying with that trucking example, you're saying roughly the entire trucking employment is probably going to be outdated in like 4 years, 3 or 4 years, because level 4 autonomy is slated for 2020. So you're saying within the span of 3 years, we're going to have truck drivers, probably drive-through workers as well, right?
Yeah, I would think we're going to see a lot of automation really coming quickly around 2025. Like this is like at a rate that we've never seen before. We're already seeing, the introductions of this, but it's just like the front part of it. Whereas because there's exponential growth, then this is going to really come on hard and fast. And actually, blockchain itself is part of this as well. There's a lot of ability with blockchain to automate essentially the middleman in so many different sectors. So that's going to have an effect as well.
Got it. And Greg, you're already working on this. So how is blockchain also going to, in other words, help us implement the basic income pieces of it? How do you look at blockchain from that perspective?
Well, I look at blockchain technology as not limited just to addressing basic income problems. I come to this world from a security background, information security. And now, with my interest in basic income, I also just look at that entire space from a security perspective, financial security. And blockchain technology just happens to be what I consider to be the correct way of writing software that interacts with the internet in a secure way. And so the work that I'm doing with Group Income simply utilizes blockchains because it deals with the internet. It deals with a group of people who interact with each other over the internet. And sure, you could have a cryptocurrency that is focused solely on basic income. But blockchain technology can be used to implement basic income in so many different kinds of ways. And in Group Income, we're not doing a cryptocurrency. We are using it as an accounting system that can work with any cryptocurrency and any fiat system as well.
Nice. How quickly, Scott, do you think we can have a working system in place in the U.S.?
Well, I think it's just a matter of will. This is not like a technical issue. This is not, we could have done this again back in 1970 when actually a version of it passed the House of Representatives under Nixon. So this is something that we could have done for a long time. The question is, how much time will it take for people to really support the idea strongly? So, right now, the most recent surveys show like a little over like 40% support. So there's a plurality of support with surveys. But, when does that get up to 80%? When is it that we start demanding it from politicians so that politicians actually feel that they have to actually be for it and be running on it in order to win their elections? So the question is, looking at this perspective, especially from automation, with this kind of 2025 window, can we establish it before then? I think we can, but I actually think it's going to be a challenge. This is not going to just automatically happen. People are going to have to push for this. And I think that blockchain is definitely a part of this conversation where this can actually, you can have a positive feedback loop between them as well. Just like with group income, you can come up with cryptocurrencies that actually pay a dividend to actually holders of the currency. And I think that's actually kind of a missing ingredient in the realm of cryptocurrency as well that I think could actually aid in a faster adoption. Because, what if a currency actually paid you to be part of its ecosystem? And the more transactions, the more people got paid. The value of these networks, like Facebook, but also just the value even in Bitcoin, it's from the actual people who use it. So what if this was recognized and people actually received a dividend for using it? I think that would actually aid in people wanting to use these systems. It could accelerate it. And if people are receiving a dividend for kind of like being a netizen dividend, a recognition of them creating the value of these networks, then I think that would aid in the adoption of a universal basic income, because people would actually see that they've earned it, that it's not some welfare scheme or something about just poverty. This is something that people have earned as being part of the network, part of the value creation.
Got it. I think we're out of time, but I still want to let you guys ask questions. I know there was one gentleman who wanted to ask a question. Is there anybody who want to ask a question? Otherwise, on that note, come on in.
Hi, my name's Jin. I have a company called Circus. Universal basic income greatly interests me as a capitalist because I'm trying to make money so I can create a future for my family and be part of the society. What we do know right now is robotics, AI, automation, nanotechnology, and a whole slew of other things are really going to become a job apocalypse in the next, you said 20 years? It could be 5 to 7 years. We're talking about millions of trucking jobs going out of existence, but it's also going to get rid of all the Lyft and Uber drivers as well. How many millions of jobs is that? McDonald's this year is automating every single one of their cashiers to kiosks. JP Morgan outsourced 200,000 hours of human accounting jobs last year. So it's getting faster and faster, and this hockey stick is getting a little more clear. My question to you guys as the experts, and maybe to the room, is who is going to finance the UBI? Because I think it's important that it's there. People say, you can just instantly get a new job. Well, why don't you just get some education? But it's not going to happen that fast. There's going to be a huge gap. And during that gap, who's going to buy from Amazon? Because Amazon could kill Best Buy or whatever. Who's going to buy your iPhone? When you have this disposable income just gone from society, who is going to propel every business? It's not just the undereducated. Oh, sorry about that.
Yes.
Scott, you want to answer that quickly?
Yeah. So I think we're even already seeing this. I think that if you look at, say, the retail apocalypse that's happening, it's not only Amazon that's responsible for that. I think there's actually, and you see this in the numbers, a lack of consumer buying power. So people, and this makes sense because real wages haven't increased for decades. All the growth has been actually at the very top. So with wages stagnant for 40 years and with prices going up over time, then people just have less and less to spend on other stuff. And because of that, then you're already seeing these companies go out of business. So it's even on the flip side of that, as a business creator, as you were saying, that if basic income creates customers as well, and that's kind of the flip side of this people need to understand, is that if there's more people with more money to actually spend into the economy, then that's actually better for everybody. Right now there's kind of a starvation of demand that's happening, and basic income would actually do a lot for that.
Well, thank you, Scott. Thank you for joining us on Skype. Really appreciate that. And thank you, Greg. I appreciate that.
Thank you, Kurt.
And next up is Tone Ways. And thank you, Tone, for waiting. Come on up.
Hey guys, wow, a few of you stuck around. Thank you. My name is Tone Vase. I'm going to jump right into it. We're already an hour behind. I'm going to try and do this as fast as possible. I'm going to actually talk really fast. It's a big change. I've been doing this presentation all through Europe where the language barrier, there was a little bit of language barrier, but now I have to talk really quick. I want to try and get through my presentation as fast as possible. I know all of you have been watching a lot of ICOs, a lot of pitches, a lot of stuff about blockchain, but I'm going to take it right back to Bitcoin. You can see behind me right there. You can find me on the World Crypto Network. You can find my podcast, Crypto Scam, though I haven't had too many episodes. And my website, Liberty Life Trail. And I have a fairly large Twitter following as Tone Vase. And I want to talk about Bitcoin. How many people here have actually spoken about Bitcoin at this conference before me? All right, we got 2 people. Not many presentations, all right? So, but I want to talk about Bitcoin from the economic and from the price perspective. So what you see behind me is the entire history of the price of Bitcoin. I actually don't want to block my presentation, so I'm not sure where I should be standing. That would be best, probably right here. So what you see behind me is the total history of Bitcoin. Oh, the bottom left is not displayed, but that's okay. We're going to zoom right in there. I like to start these presentations even from before Bitcoin started. So here's a quote from a Nobel Prize-winning economist, Paul Krugman, from a magazine where he famously said, and he tried to back away from these comments, that back in 1998, that by 2005, the relevance of the internet will be no greater than the fax machine. And he was made fun of these comments for a while. There was another economist from 1999 who had something different to say.
So that I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash, a method whereby on the internet you can transfer funds from A to B without A knowing B or B knowing A. The way in which I can take a $20 bill and hand it over to you, and there's no record of where it came from. And you may get that without knowing who I am. That kind of thing will develop on the internet, and that will make it even easier for people to use the internet. Of course, it has its negative side. It means that the gangsters, the people who are engaged in illegal transactions will also have an easier way to carry on their business.
All right, so that's what Milton Friedman had to say in 1999, and he pretty much described Bitcoin pretty well. Unfortunately, he passed away in 2006, just a few years before Satoshi Nakamoto's white paper. So here comes Bitcoin. It starts out in 2009. No one is really paying attention to it. Nothing is going on. And then in late 2010, it finally gets an uptick to 50 cents on the price. And that came speculation out of Australia. The reason I use Australia is because that's where the man named Julian Assange is from because of WikiLeaks. In December of 2010, Amir Taki suggested that WikiLeaks should use Bitcoin to fund its operations with donations because they were cut off from all forms of funding. And I heard about Bitcoin around this time, probably in early 2011, because this was being debated. Satoshi actually did not want this. He thought this was way too early technologically, and it would have gotten too much attention for Bitcoin. Something very interesting happened later on in 2011 in the summer. Price of Bitcoin slowly continued to rise. It made it all the way up to like $1, and then it rose all the way to $30. Towards the halfway up to the top of $30, something very interesting happened out of New York. Anyone know who this man is out of New York? Chuck Schumer. That is the Senator Chuck Schumer out of New York. And he went on TV. This is a 34-second clip. I wish I can play it, but it's not on YouTube, so I couldn't embed it. But if you Google
Chuck Schumer, Silk Road from 2011. He went on TV complaining about Silk Road, and he talked about there's this crazy website. It's called Silk Road. There it is on his computer. He was showing people what was on it, and then he said, but the only way to access this website is through Tor, and he showed people Tor, and then he's like, and the only currency they're accepting is Bitcoin. It was the greatest 60-second tutorial on how and why to use Bitcoin the world had ever seen until today. And it significantly helped that everyone watching is like, wait a minute, so I can now buy drugs from my own living room? Thank you, Chuck Schumer. And that significantly helped bring the price of Bitcoin to $30, and we had our very first bubble. We went up to $30, and then boom, we crashed about 98% down to $2. Still the biggest bubble Bitcoin price ever had. On the back end of that bubble, WikiLeaks also began accepting Bitcoin. Now, I had heard about it over the WikiLeaks situation, so I became familiar with Bitcoin then, but of course I didn't do anything about it. Sometimes I wish I was participating in those drug markets. I would have got into Bitcoin earlier, but I had to wait a little bit. Now, here comes 2012. Not much was happening in 2012 other than China. In the middle of 2012, Bitcoin was featured on CCTV, which is the Chinese national channel watched by over 500 million people, which is greater than the population of all of the United States. Bitcoin went up again on that news. We went to about $13.50, and then boom, we crashed 50% to $7. 2013 was a very interesting year, mostly because of hindsight. In hindsight, we know that the Mt. Gox exchange in Japan activated WillyBot in early 2013. Now, of course, again, in hindsight, we knew it in real time. Mt. Gox got hacked in 2011, but no one really knew how bad it got hacked in 2011. But they were running a fractional reserve. In addition, the leaked emails are showing that when Mark Karpeles bought Mt. Gox, he bought it with 80,000 Bitcoin missing, and he didn't even know. And there was like emails where he was emailing Jeb McCaleb, who sold it to him, like, hey, where's the 80,000 Bitcoin? And he was like, it's not a big deal. It's only $60,000. You can just go and buy it or mine it. Of course, in reality, $60,000 is not a big deal, but who has 80,000 Bitcoins in 2010? There aren't that many Bitcoins even in circulation, or early 2011 when he bought it. I think he bought it in like March of 2011. And this is just before the bubble to $30. So yeah, it was $60,000, and then 2 months later, it's about $60 million. And Mt. Gox was always in trouble from the start. Now, why on earth they thought that WillyBot rising the price of Bitcoin would make them more solvent, I still don't know. You would think that you would want to crash the price of Bitcoin if you're insolvent to buy them, not raise it. But whatever they did didn't really work. And now we go to the middle of 2013. This is where I actually got up and paid attention to Bitcoin and finally bought Bitcoin because of the incident of Cyprus. The Cyprus bank shut down. They initially planned to only confiscate 6.75% from all accounts and accounts over 100,000 at 10%. They ended up settling at 47.5% confiscation of all money in the banks over 100,000 euros. So this is where I kind of said, hey, this can happen in any first world country. What is the solution? And I ran out and I started buying a bunch of Bitcoin while people at work were making fun of me and saying, no, this can't happen here. So of course, the Wall Street guy and trader and like the expert that I am, I'm buying Bitcoin right into the 250 bubble, and then I'm watching my position crash 75% fairly quickly. Now, the difference was that I was buying this for the long term, and I was still fairly confident that Bitcoin was something because I have been watching it a little bit through 2012. So we go on, and then you see this little bump over $85. So there was a day, August 1st, 2013, the price of Bitcoin falls about 50% in one day from $120 to $85. Who remembers what happened on August 1st, 2013? Silk Road. That was the Silk Road bust. The funny story that I have from that incident is, even though all my coworkers know that I don't really participate in any kind of substances, but one of my coworkers like runs up to my desk first thing in the morning and starts laughing. He's like, haha, Silk Road is down. What are you going to do with your Bitcoins now? And that was a big question. It was a question for about 24 hours, and then Bitcoin takes off right into the bubble. Of course, at that time, the American exchanges are closing. Chinese exchanges have all the volume. How things are changing. And the Japanese exchange was going away. And we got a bubble into 1200. The Senate hearings in New York helped raise that bubble because they seemed fairly lenient towards Bitcoin. And that was the big bubble. Now let's talk about what happened on the way down. Of course, this was a pretty big bear market. It was the longest bear market we have. It lasted for about 1.5 years. And the economic formula is simple, right? It's like, what's the price? Price is supply versus demand. But in Bitcoin, what is supply? What is demand? Mined coins, that's obvious. You know, Bitcoin has its currency inflation. Mined coins is stably predictable. But people don't realize that merchant selling is supply. When a merchant accepts Bitcoin and they don't hold the Bitcoin, it immediately gets sold in the open market. And that needs to be made up by the demand of new users. And back at that time, you know what, let's skip that part. This is just me talking about how the price of Bitcoin fell in a typical bubble chart right there. And it fell identical to what silver looked like, but this is normally a longer presentation. I'll skip that part. So I was in a bunch of debates saying, well, if PayPal integrates Bitcoin, we're kind of screwed because now every business accepts Bitcoin. They wouldn't even know they're accepting Bitcoin, and it just gets sold on the open market, creating more supply without any demand. Let's skip that one as well. Now let's talk about demand. So I wrote this article looks like April 4th, 2016, where I kind of just started talking about, well, what is Bitcoin? Bitcoin has two very key properties. One of them, for the first time in human history, you can possess something that no one else can confiscate from you because you can memorize your private key, you can memorize your password, you can delete all traces of your Bitcoin, and as long as you remember your password, you can always recover them, okay? So for the first time in human history, you can own something that is unconfiscatable. The second property that Bitcoin has that we haven't had before is censorship-resistant value transfer. And you got to think, okay, so where is censorship-resistant value transfer important? Where is it useful? Because it's not really useful for buying a cup of coffee because no one is censoring your purchase of a cup of coffee. So then we go through the list, and I was kind of looking at it as I noticed these things happening in the real market. For me, the first use case was donations to organizations like WikiLeaks, okay? Then we move on to the Silk Road case, purchasing of goods. Gambling, actually, was another reason why I wanted to jump into Bitcoin. I wanted to make some sports bets. And the government of New York and the US makes it very difficult for me to gamble, and Bitcoin made it easy. Of course, this was in 2013, and even though my college sports team that I bought the Bitcoin to bet on won the college football championship that year, and I realized real quickly, oh my God, why the hell am I wasting this Bitcoin and losing it gambling? And that was probably the last time I ever gambled. When I realized, did I just lose like half a Bitcoin? And it wasn't a big deal. It was like $40 at the time, but a little more painful now. And then we move on to purchasing services the government doesn't like, and this is where there's this Backpage article that I wrote that some people kind of enjoyed reading. And then we get into this hiding asset cases and also transferring of value cross-border. And I really want to focus on transferring of value cross-border because that is something that has historically been dominated by gold, which will probably not be so. So why is transferring value cross-border important? Well, because certain economies get into trouble sooner or later. The superpowers of the world has always changed. The reserve currency of the world has always changed. And I have always been very, very critical of the common currency in the euro. I am still surprised that it still like kind of has a value above $1. I don't believe that that will actually hold up. The first time I ever gave this presentation was in February of 2015. And in that presentation, I talked about the problems in the Greek banks, which ended up shutting down about 4 months later. I'll talk more about that in a few minutes. But after that, I've been talking about the banking problems in Italy and how they're going to do the same thing. Now, miraculously, over the last few years, Italy has stayed off this banking disaster twice. And I gave this presentation in Italy, and everyone in the audience was just as confused as I am how they have managed not to have a bank holiday and a complete banking failure. They're somehow able to get out of it. Then again, Spain and Portugal also have big problems with their banks. They're all over leveraged. France and Germany as well. Germany has kind of been bailing out the whole Eurozone for a while, only because they really want the euro, because if the euro goes away, the German Deutschmark comes back and it becomes very, very expensive. So for now, Germany is willing to bail out the Southern Europe, but I don't know how long it's going to last. I don't know how long those people are going to want to keep doing it. And the migrant crisis, the migrant situation is having a bit of an effect. Not enough time to talk about it here. So what happens when there are economic problems in your jurisdiction? People just pack whatever they have and they leave. They go somewhere else. If you notice, the UK has already exited the European Union and they want to be independent. So what are some of the other reasons that people move? One of the big reasons is, of course, taxes. I remember using Airbnb as like fairly early. I was one of the, I got to Uber late, but Airbnb I started using early because I like to travel. And am I still on the mic? Yes. I am, right? All right, it's just sounded like different. One day I was booking, I was going to a Bitcoin event in North Carolina, and I was booking something, and I'm like, and I know how much prices are because I travel a lot, and I'm like, wait a minute, why is this Airbnb a little bit more expensive than it should be? And all of a sudden, all these taxes showed up, raising the price of my Airbnb by about 25 to 30%, which was kind of insane. Another funny thing happened during this Airbnb booking. I noticed that they made me sign a brand new terms of service. How many of you read your terms of service before you check them? I see one hand went up. How did you have time to come to this event? So when I saw that, I saw the scroll bar was a little too small. So me being a Windows user, yes, I know. And so I just did, Control A, Control C, Control V, pasted it into Microsoft Word, and I'm like, well, why is that still spinning? Because I wanted to see the word count. It was like spinning for about 40 seconds. And here's what came back. Airbnb terms of service, 33,000 words, 55 pages in a Microsoft Word document, okay? I don't know, hey, Jimmy, all your articles is probably already longer than that, right? But you start comparing it to other like famous works of written documents, and they're like, oh, the U.S. Declaration of Independence, 1,300 words, U.S. Constitution with all of its amendments, kind of still sort of would follow that. That's less than 9,000 words. When I was doing this presentation in the EU, it was a lot of fun making fun of the EU regulation on the sale of cabbage being just under 27,000 words. And notice the Satoshi Nakamoto white paper that gave us Bitcoin. It's only 3,400 words. This, of course, ends up transferring not just into terms of service, but into laws. Like the U.S. is passing certain bills in jurisdictions, and people are making fun of them that nobody read the bill. Anyone want to take a guess at what this bill is that got passed in America? Obamacare. A lot of people think this is Dodd-Frank. No, this is Obamacare. So when people say that, oh, they passed a law nobody read, this is why. This is 33,000 pages. That was pretty much Obamacare. So we have all these laws, all these regulations people don't understand, people don't know how to read. So if you're a foreign company, well, you start making little disclaimers. This is Volturo, they're out of Germany. I confirm that I am not a resident of Iran, Syria, North Korea, or the state of New York. This is in response to the BitLicense situation in New York. This is the little disclaimer. Like, this is the kind of terms and conditions I like to read and just check off. though me being a New York resident made it a little problematic. The other issue I want to talk about real quick, as I know my time is starting to run out, is this war on cash. I've been talking about war on cash for a little while, and there was this great article from the Harvard Business Review that explained it really, really well. And it talked about all of the reasons why governments want to eliminate cash. One of them is without cash, governments can set any monetary policy that they like, especially negative interest rates. I gave this presentation in Switzerland. They were the first country to go negative interest rate. Germany tried, didn't really last long. What happens is, if you go to negative interest rates and you have cash, people can then take the cash out of the bank and exit the system. Well, why do you want the bank charging you money for holding money at the bank? The other situation is without cash, there's no bank run because there's no ATMs. So you eliminate the ATMs, you eliminate the possibility of a bank run. All of those pictures of people lining up down the block for an ATM in 1929 crash or in Greece, pictures are the same. One is in black and white, one is in color. Otherwise, you can't tell them apart. If there's no cash, you can't exit the system. No run on the bank, you can't have a bank run. And that's important. No more visual images of people running to the banks. And the biggest reason is the governments think that every one of us is a tax cheat, and the only reason why they haven't given us a beautiful utopia is because they don't have enough time or enough money, and it's because we're not giving them that money because we're all cheating on our taxes. Without cash, they think they will solve the problem, and then, oh, oops, Bitcoin. Can't do that anymore. But if you look at India, it looks like 30% to 44% of GDP is missing because of cash and potential tax evasion. They went on to do a graphic. The countries in red are the countries where the government spend a lot of money maintaining a cash system. Europe is expensive, Canada is cheap, US is in the middle. And this is a graphic. If you're in the upper right-hand corner, you benefit the most from eliminating cash, and you're technologically ready to do so. If you look at India, it's all the way on the bottom and all the way on the right. So India would benefit the most from eliminating cash, but unfortunately, because they're all the way down, they are not technologically ready to do so, yet they tried by canceling the currency, and they're trying to do it. Here's a graphic out of France where you have to identify yourself to buy anything with 1,000 euros of cash. A graphic out of the US, I have to read this. This is out of Louisiana. I can't find this law anymore because they probably realized how silly it was. A secondary dealer shall not enter into any cash transaction in payment for a purchase of junk or used or secondary property. So if you're in Louisiana, you can't sell that old bicycle of yours for $20 in cash. You need to take a check or a credit card or some other form of payment. In Germany, they're using the concept of terrorism. They think that terrorists are digging in archaeological sites. So now you have to register anything of value, coins, paintings, anything of collector value over 100 euros. You need to register that. Of course, they say it's for protection, but chances are they want to tax it. Governments like to tax immovable objects. If you have a $10,000 painting on your wall, you might have to pay a tax every year to do it or sell the painting. Also, Germany is very, very aware historically what happens in times of stress. People used to build extra basements and hide their wine and hide their painting just to hide their money and valuables. And if you have to force people to identify themselves for anything of value, it's really hard to hide your hard-earned money. And what happens is people just move. Here's a chart from Martin Armstrong's blog, strongly recommended. Talked about the population of Rome. Rome had this huge public sector with the soldiers. They kept promising. I don't care about the $10 trillion debt we have in America. What worries me is the $120 trillion debt. 20 trillion is external debt. No one is going to come here and collect it. We don't even know I don't even know who we owe that to. It's just printed. But the 120 trillion we owe to our public employees is a problem. If that check bounces, I want to be somewhere else. It'll be the teachers and the soldiers and the firemen and the police. They're going to be the ones in the street expecting to get back what they owed, kind of like the Roman soldiers when they keep devaluing the currency. They promised them pensions. They promised them medical care. None of that was delivered. And then the soldiers came back, kind of started almost sacking their own city, stopped protecting the city. People just moved. And look, it's the same bubble chart, right? It falls, it comes back. Oh, we're coming back. And then you have a real fall. There was a 98% of population decline in Rome. Here is a customs card. They want to know how much gold you're carrying as you travel. Some of the customs cards, even jewelry. And here's an example from TechCrunch. Before the Greek crisis, why Greeks should not switch to Bitcoin. And a few months later, a Bitcoin provider, helps Greece move their money. That's pretty much it. I usually conclude this presentation with my view on price and technical analysis. I talk about my timing analysis, where I published this in 2014, saying there'll be a significant event in the middle of June 2015 and a huge event in the middle of August 2017. I didn't get the day exactly right, but within a week of both of these dates, and the June event corresponded to the Greek banking crisis, what I think reversed the price of Bitcoin. And of course, we all know what happened in the middle of August of this year. We got segued. So this was in an article from 2014 where I said something big is going to happen on August 14, 2017. We actually managed to get segued. There's a very interesting article on my website about that kind of time analysis. And just going to go through my charts for a second. This was my view on the way down. I talk about how I got that wrong. I thought we would go lower. I was looking for my date. My date came on the Greek crisis, but it wasn't the price low. It was more of a time low. I mistimed that one. I've been bullish ever since. And these are some of my recent ones. Some of my tweets about the price, calling some of the lows, some of the highs. Those of you that watch my videos. You can see that green arrow right there. You can't even see it. This green arrow right there was drawn at this point in time. So some of them I've gotten right better than others. Again, I want to let you guys go to your after parties. Some of the other calls right there, I was screaming there's a buy indication at that level, and that was a good call, and a couple of others. You can follow me on Twitter. I only do like private consulting. All of this is free information. I do videos on my YouTube channel. Just try to predict the price of Bitcoin for fun. You can see that triangle right there, and that's what happened. I tweeted that one out right here saying, hey, it's forming a triangle. There's your target. And the target got met fairly quickly. And this is the last slide. It's my most recent one where I pretty much called the $3,000 bottom and the fall in real time. And Max Kaiser, people familiar who Max Kaiser is in here? Oh, I thought there'd be more hands. He's got way more followers than me, and then he replied thanking me that he bought Bitcoin at $29.90, and the low was, I think, $29.80, and then we've been up ever since. That's pretty much it. Just follow me on Twitter, follow me on YouTube. I try to put out as much content as I can. And, oh yeah, I got a seminar tomorrow. Oh, wow. Let me not forget that tomorrow. It's not in this building, guys. I hope it's not sold out again for the second time. The venue has been expanded, probably about 100 people, where I'm going to mostly talk about these kinds of charts. Well, not this one, but I'm going to talk about the charts that you saw right before this. I'm going to educate people how to be better traders, like the basics of trading. And follow me on Twitter, follow me on YouTube. I have my own YouTube channel, and I'm on the World Crypto Network with Jimmy Sung, Vortex, and Thomas Hunt. I don't know if I have time for questions. It's up to you guys. I'm not in a rush, but it's up to the conference organizers. Oh. No, we still have room. We still have room in the seminar. I think it's like 300 for the whole day. It officially starts at 8:30. Thank you, Kurt, for that one. But I'll be there by 8:30. But we'll really get the things going like a little after 9. It's in a different venue. If you go to the website of this conference, you can scroll down below the speakers. You see my seminar. Click on that. Takes you to the Eventbrite. And the address is there. It's like a 10-minute Uber ride from this area, 10, 15-minute Uber ride away, closer to the airport. So if you're interested. All right, I'll take some questions. I already see Ozzy's hand up, and then we'll do one more there. Oh, wow. So I don't have a price prediction for the end of the month. I will say that I am looking for a new high going into the next major hard fork of November. So I'm looking for a high in November. I want that high to be above $6,000, preferably closer to $7,000. The reason why I want that is because if we go to 6,000 to 7,000, we can then correct and fall back to only 5,000, because if we go high enough above 5,000, 5,000 becomes very good support. If you can look at, well, let me go back up a little bit. I want to show you guys something. A little further. Oh, man. Yep, that's it. That's the one. So what I like to see is when price breaks out to a new high, it goes up and then it falls back to the prior high. It happened right there. Price breaks out again to a new high. As you can see, we never fell back to the prior high, which was actually worrying me. Like, we did it here. We broke out, and then we fell back to the prior high. We broke out, fell back to the prior high. That's why I got these calls very, very right on the reversal. This one, we went way too high, and when we started falling, even though I kind of called that one, I was still nervous we were going to go back to the prior high. We didn't, but we still can. We went up, when we broke out again above 3,000, we went all the way to 5. So we went high enough to fall, and 3,000 reversed us again. We need to go high enough above 5,000, so when it corrects again, 5,000 will hold the price up. If we only go to 5,500 and the market starts to turn, 5,000 will not hold it up, because we're not, the traders won't be coming back thinking, oh, the dip is big enough. You know, you want to buy the dip, but you want to see a bigger dip. And if we only go to like 5,500, then there is a chance we can fall all the way back to 1,300, because that area was never tested, and it still continues to worry me. But if we go to 7,500 in November, like I think is possible over the next month, then we can pull back to 5 and then start to go up from there, or kind of take a break. So that's kind of what I'm looking for this year. A new high between 6 and 7, come back to 5, maybe close the year at like 5,300 or something like that. And then I'm expecting a few more good years, but then there will be a major correction coming. I don't know what would cause it, but I have plenty of time to think about it some more. I had a question there, and then we'll go here. Oh, absolutely not. Bcash has proven that if you just have enough media attention and some miners on your side and a bunch of believers, you can profit from that venture. I think that altcoins are done. No one will ever launch an altcoin again. The new way to launch an altcoin is to fork Bitcoin. Now, the question becomes, when you fork your Bitcoin, are you going to also change the proof of work model so you're not competing with Bitcoin's miners, or are you going after Bitcoin by leaving the same proof of work algorithm? So, and we will see both of these tests over the next 30 days or so. We have a big old fork coming up that's going to change the mining algorithm, and then we have the 2x fork coming in November. I believe they're both going to happen, and we'll see. I mean, I'm not scared. I mean, Bcash is such a joke that I'm not scared for any more hard forks. And if any, and that one had a lot of momentum behind it. But yeah, they're coming, because that's how you do it. That's how you launch your altcoin to try and be rich. Next. I honestly don't know, and I don't think it really makes that big of a difference, because some big players are coming in and buying a lot of this Bitcoin. The other thing you have to realize is, if you have a whale in Bitcoin that really, really understands Bitcoin, he's doing something good with that money. If you have a whale in Bitcoin that got lucky and barely understands what Bitcoin is, but he just got lucky because he bought a lot of it early, sooner or later he'll be separated from that Bitcoin. Because they're gonna be investing in like forks, okay? Because they don't understand how Bitcoin works, apparently. So I'm not worried about the whales in Bitcoin, just like I'm not worried about Warren Buffett or George Soros being whales in the traditional space, because they really don't affect the average person. They're just, fighting each other. Sometimes they collude with each other, but either way, the person on the street isn't really affected. Whales in Bitcoin don't bother me. If you're there because you're smart, you understand Bitcoin, you're helping it. If you're there because you got lucky, then you'll be separated from it sooner or later. All right. Any more questions, or are you guys ready for the after events? All right. Looks like we're done. All right. Thank you very much, guys. I know I didn't have a big crowd, but I'm glad you guys stuck around to watch the presentation.
Thank you. Thank you for the presentation. I actually enjoyed it. I have a question for you.
Sure.
What about 12 months from now?
For what? Price?
Yes.
Oh, price from 12 months from now. Oh boy. Okay, so the way I'm looking at charts, the charts are telling me that this November we'll have a high, and then we're going to correct for 1 to 4 months. So I think early in the year of next year, there's going to be some correction. I'm hoping that we can still stay above 5,000 with that correction, but it's possible that that second fork will be a bigger problem that I anticipate. And yeah, can we go back to 1,300? Absolutely. But then we're going to have a reversal, and I am looking for next year to be a decent year. It's too early to say if 2018 will close higher than 2017. But I am expecting 2019, 20, and 21 to be really big bull markets, and then we might have a multi-year correction. So that's the best I can do at the moment. In those kinds of cases, I'd rather talk about time analysis than price analysis. In this case, like, I don't know what price is going to be. Like, again, I'm looking at a correction November into next year, followed by multi-year of upside. How high can we go? That's so random. Like, it really depends on the S-curve and how people jump onto Bitcoin or geopolitical issues. One last comment on that. So political uncertainty really helps things like Bitcoin. But big problems like another world war is going to hurt Bitcoin. It'll be a problem. It's just like in 2008. Like all the gold bugs, they're always waiting for a market crash, so their gold goes to like unreasonably high prices. But what you learned in 2008, that when the market, the housing market crashed, and all of the financial sector crashed, so many people lost their jobs, so much economic activity was destroyed, that the last thing people cared about was gold, and the price of gold crashed with the stock market. Because, yeah, it's fun to be going out and buying gold, but when, half your family loses their job, you care about buying food. You're not caring about buying gold. So you want, like, the elimination of cash to help Bitcoin. You want you want, like, Trump and North Korea pecking at each other, but you don't really want major problems, because then people don't focus on things like Bitcoin. They focus on how do they eat, how do they protect their family. They'll probably be buying guns, things like that, right? So you want some problems, but not big problems.
Thank you, Tone. Really appreciate that.
Thanks, guys.
And his class is at Upload VR, so that you guys know it's a couple of miles from here. It's not that far. We can start around 8:39, so don't come at 8:30. All right, guys, thank you for coming. Really appreciate your support. If you guys want to hang around, network, please do.
Did you go?
And thank you for coming.
Oh, did you go now?